So yesterday we had one last thing which I had to discuss from partnership accounts. Okay. Yeah, let's do that once and we'll get into company accounts. What is piecemeal distribution, first of all? You know, when the dissolution of the firm is happening, what is the process? They are selling all the assets and giving the money to the concerned, correct? No. Piecemeal is, in reality, can you sell all the assets in one shot? Very rarely. You can, but it is very rare. In reality, what will happen? Some assets you'll sell first, then some assets, then some assets. You are selling the assets in pieces and realizing the money also in pieces. When you're getting first installment, okay, will you wait till the end to give it? No, no. Now you got the money, you can start distribution. No. But since we have part money, whom should we give priority? Was the question. So that guidance is given under this piecemeal distribution. Okay. One thing is clear there are two methods for this piecemeal distribution, but in any method, okay, one thing is clear. Out of the money that you are realizing from realization of assets, first it should be paid towards, first priority is towards realization expense. Alva, whatever realization expense you incur, to that person you have to pay money first. Papa, that guy came only for realization. We cannot, cheat him. The second priority is for outside liability. Okay. And third priority is for partners loan. And the last priority is for partners capital. Clear? In this priority. Okay, this priority is same in both the methods of piecemeal distribution. Linker, absenter. Oh, I've sent it, but for some reason, I've sent it. Now, now it came. Okay. Now, this is the order of priority we have to follow in any of the methods of piecemeal distribution. Then what will this method differ? Aita, the problem is not about first two, three. Aita, it is very easy to prioritize the first two, three. Say suppose we have three partners. A has a capital of 3 lakh. B has a capital of 4 lakh. And C has a capital of 2 lakh, whatever. Now, among A, B, and C, whom should I prioritize? Was the question. Okay. That we will learn in this piecemeal distribution. Aita? From whatever money you get, whatever money you realize, first money should go to realization. Next, outside liabilities. Next, partners loan. Until that, there is no problem. Once it comes to partners capital, how to distribute? To answer this, we have two methods, okay, for piecemeal distribution. One is maximum loss method. And one more is what? Yes, yes. That's the realization amount. Whatever money you are getting while selling the assets. Huh? Hmm. No, no, not profit. It's not about profit, nothing. Whatever money you are realizing, is the firm keeping the money for itself? What is it doing? We have to give it to concern, no? We have to give it towards liability, loan, and partners. How will we distribute? From the money that we are getting by selling the assets is what we are learning. So maximum loss method and highest relative. It's nothing about profit or loss, man. It's just you realizing the money by selling the assets, how you distribute it to the concerned stakeholders. But the thing is, you're not getting the entire money in one shot. Aita, first you sell some assets, you got money. Some 10,000 you got. How to distribute this 10? Then again you sold some assets, again you got some 15,000. How to distribute this? That is all we are learning. Nothing else. All no, in this order of priority I have to give. First give it off to realization expense. Yes. Yes. Okay. Not give it off, I'll tell you what. Wait, we'll see it in an example. Okay. So these are the two methods we have for doing piecemeal. Let's do the first method. Okay. Maximum loss method. Here you'll understand. It's there in our September 26 only. Here. ABC were partners sharing profits and losses in the ratio 4 is to 3 is to 1. Okay. This is their balance sheet. See, they have building machinery stock debtors. Here they have creditors, bank's loan, and ACE loan. ACE loan is what? Partners loan. They decided to dissolve the business and the assets were realized gradually. See, gradually, entire amount I did not get in one shot. See, May 30, 33,000 I realized and I've paid an expense of 3,000, some selling expense realization. So our net realization is how much? So I would have got 30. So I have to distribute 30. Then again on July I got 25,200 minus 2,200 has gone. How much is the net realization? 20. I thought, huh? Yeah, yes, they'll give. That is piecemeal, no? 57 minus 4,500. Then 68 minus 8,000. 60,000 is the realization. 1 lakh 8 minus 10,000. So this is the realization that we have got at each installment. Show the distribution of cash among partners using maximum possible loss method. So we are using the first. The only thing here is distribution. No dissolution account, no nothing, no account. How I will distribute the cash to the concerned. I've realized it. You see how much money we have got. How will I distribute this? That's all. Okay. We're doing maximum loss method. Okay. First, I will give to outside liability. Then I'll give to partners loan. Then capital of A, B, and C. How much balance we have right now to give? No, da. Realization expense. No information here about realization expense. So that's why I have not put it. Okay. So how much outsiders liability do we have? We have bank loan of 13,000. See, in here also, bank loan, creditors. Just a second. What happened? Hmm. So, what was it? Hmm. So bank loan creditors. How much is the balance of bank loan? 13,500. Then creditors, we have 30. Yes. Then partners loan we have 15,000. Then capital account balances 1 lakh 5. 45, 70. Okay. Now tell me, if you see bank loan is also outside liability, creditors is also outside liability. Among bank loan and creditors, whom should I prioritize? Huh? Creditors or bank loan? Huh? Both are outside liabilities only. I will first prioritize bank loan and then I will prioritize creditors. Why? Because bank loans are secured. Correct? No. Secured means what? When I've taken a bank loan, I've given one of my asset as security. If something happens, that security can be triggered. Money, a bank can sell that asset and recover the money. Since they are secured creditors, they'll be given first priority. Aita? Because I've secured my debt by pledging or mortgaging an asset. Then both become same ranking. Then we cannot prioritize any. It should be secured, then unsecured. Aita? They will give it in that way. So then, now, how much do we first? What you have to see while doing is, do we already have existing cash? You have to see. Do we already have existing cash in the question? Nothing. So no need to worry. Say suppose you had existing cash of 10,000. First you have to distribute that 10 and then start with distributing the money that you are getting from the realization. Okay. First look for cash here. If there was cash of 10,000, you would have distributed it. Here it's not there, leave. Next, first realization is on May 30. This is the first realization of 30,000. Tell me, how will I distribute this 30? First, 13,500 will go to bank loan because they are secured. Aita? Out of 30,000, 13,500 gone. Remaining is that 16,500 will go to. So with that, my first realization money is over. So wait, asli aata will start when capital comes. Remaining creditor balance. Hey, 39,000 is the balance. We have paid only 16,500. 20. Okay. Next realization is from 30th July. How much is the second realization? 23,000. Now what will I do? Out of 23, 22,500 I will give to creditors and remaining 500 I'll give it towards partners loan. So with that, second realization got over. This is nil. This is nil. How much more we are supposed to give to partners loan? 14,000. Done. Third realization, 30th. Okay. How much is the realization? 52,500. Okay. Out of 52,500, what will I do? Pay 14,500 to partners loan. So how much more is remaining? So 38,000 is still remaining. Now we have to stop. Now the stuff starts. Okay. Now 38,000 should be distributed among partners capital A, B, and C. But the question is how to, in what ratio should I distribute this 38,000? That was the problem we had. Okay. So to solve this, the first method we have is maximum loss. Okay. We cannot just blindly pay it like that. Okay. Because some people will be having more capital contribution as compared to their PSR, profit sharing ratio. They'll be having less profit sharing ratio, but more capital contribution, or vice versa. Less capital contribution, but more profit sharing ratio. Because of this, we cannot just blindly distribute the money. We have to follow some structured approach. That's why we are doing this. Okay. Now, how to do this method is take the total capital that we are supposed to pay to the partners. How much? 105 plus 45 plus 75. Total capital is 2,25,000. This is the amount. Huh? Here only you can do it. In the statement only. 2,25,000 is the capital we have to pay. But right now, how much I have? 38. How to do this method is every time you're doing the distribution, no, do it as if that realization is the last realization. That means 38,000 rupees is the last realization that you have. Further, you will not get money. That is the assumption that you're doing at that point of time. Because again, you'll get a realization in reality. That is okay. Now, what you'll do, 38,000 is the last realization. If 38 is the last realization, I can pay only 38,000. So, what's the maximum loss that they'll have to face? 1,87,000. This 1,87,000 is the maximum loss that they'll have to face. Distribute this loss among A, B, and C in their profit sharing ratio. Come on. 1,87,000. Huh? Yeah, loss. The loss should be distributed. 4:3:2. 4:3:1 now. It's 93,500. 70,125. 23,000. Okay. What did I do now? I took their total capital. I was able to give only 38. That means the total loss that should be faced by the partners is 187. I divided the loss now. Okay. I distributed the loss. What is remaining after distribution of loss? So earlier his capital balance was 1,05,000. I allocated a loss of 93,500. This allocation of loss is just notional. Now what is the remaining amount? Minus 93,500. It should be 11,500. Here it is. What the? Here it is. Minus 25. 125. His capital is less. Allocation of loss is more. Next. 51,625. You understood, huh? Now, generally, most of the times here, positive will come. All the three. What number will come now as positive? That will be equal to the distribution amount, which is 38,000. Generally. But here what happened? One problem happened. What was the problem? For one guy, there is a deficiency. Whenever this deficiency comes, no, blindly follow Garner versus Murray. So the deficiency will be shared by the positive partners in capital ratio. In capital. Now, how much is the deficiency of B? 25, 125. Share it among A and C in their capital ratio. What is their capital ratio? Negative. That negative came, no? So, what is their capital ratio of A and C? 1,05,000 is to 1,05,000 is to 75,000. How much? Divide 25, 125 in 7:5 ratio. So the loss of the deficiency of B will be borne by, I'll write it here, deficiency of to be borne by A and C in capital ratio. How much? 25, 125 is to 7 is to. Round off ಮಾಡ್ಬಿಟ್ಟು ಹೇಳಿ. 656 and one more 469. You understood? The deficiency of B is now borne by A and C. So now B's balance will become 0 because the deficiency is taken over by A and C. This fellow's nonsense. Now this fellow will get a deficiency. How much? This fellow. Now again, still we have a deficiency balance. Don't worry. Follow again, Gardner versus Murray. Now who is the solvent partner? I mean, positive partner? C. Now the deficiency of A will be borne by C. That's all. Yeah. So here it's 3156 minus this becomes. Did you see? It is 38. 41 156 minus 3156. So it is 38,000. Yes. Wait, I'll tell you. That was the what? The realization amount which we were supposed to distribute it to ABC. After all this calculation, what you have to understand from the 38 is the 38 will be first given to C entirely. Yeah. What? Only for every level of realization. Here deficiency came, that's why you had to do 2, 3. If deficiency doesn't come, say suppose all the three partners had got positive balances after allocation, then the sum of that balances will be equal to 38,000. Which one? But there is a deficiency, no? I have to eliminate the deficiency. Now, in the end, 38,000 came, no? What is the understanding? The realization amount 38 first will be given to C. Okay. This should always match the. Yes, the realization amount. Yes. Now what is the, all these were just calculations. Now what is the updated balance? First from top you have to write down. Nil. Next. A's did we pay anything towards A? No. So A's balance will be intact, which is 1,05,000. Did we pay anything to B? No. His balance will be intact. 40. Did we pay anything to C? Yes. So out of 75, 38 we have given. To remaining balance will be 75 was his balance. 38 we are giving. 75 minus 38. 75 minus 38, Noda. That is what we are paying. So his updated balance is 37. Did you understand? The entire calculation allocation of loss is just notional for the purpose of the calculation. We'll do the next realization. You'll understand. Huh? The ratio in which deficiency was shared was capital ratio of A and C, which was 7:5. Please note that. This we have to do it for every realization. This was for the first second realization. Done. Now let's go to the third realization. How much was third realization? Third is also over, no? Fourth realization, which is 60,000. Again, tell me how to do. Take your Total capital balance remaining. How much? 105 plus 45, 150. 150 plus 37,500. Sorry, 30,000. So it becomes total capital is 1,87,000. How much I have from the third realization? That means my maximum losses 1,27,000. This 127 should now be distributed among A, B, C in their PSR. Distribute 127. PSR. 127. 4 is to, it is 63,500. Then 47,625 again. 50. 15,000. Now reduce and see what's the balances after allocating the loss. 41,500. Now this becomes negative 2,625. And this one? Now what you have to do? There's a deficiency of B. Deficiency of B to be borne by A and C in capital ratio, which is 7:5. 531. A. How die? Loss is only 226. 1531. 1531.2. Okay, just round it off. It's okay. 1531 will do 15. And this in 8. 0.75. I will make it 1099. So 93. So we'll make it 94. So this one is tell me. 39969. Okay, now we did not get any deficiency. That means 60,000 will be divided like this. For A, we will give 39,969, and for C, we will give 20,031. Okay, so now what's the updated balances? He had a balance of 1,05,000. Out of 1,05,000, you paid 39,969. Correct? So how much is the balance? 65? 31. Next, this fellow we did not give anything, so it will be same. So 45,000. C, we had a balance of 37. Out of 37, we have paid 20,031. 16,969. Understood? Like this, you have to keep doing. Last realization, I guess. It is last one, which is 98,000. So what's the total balances? 65,031 plus 45 plus 16,969. You know what? This number, instead of adding, no, it will be equal to this number generally. 127. Correct, no? 1,27,000. Minus the last realization is 98. So maximum losses. Divide 29 in PSR. Okay. Okay. Next. 3,620. Hmm. Next. Next. 3, 4. See, everything is positive. No, this is the distribution of 98,000. So, updated balance. See, his balance was 65,031. You have paid 50,532. Balance is this, it will be this one. It's 14,036. I still have to pay this much balance, but I don't have realization. When I get it, I will do it. Okay. So that's your piecemeal distribution. See, simple stuff only. If it comes in exam, no crazy. What da? What happened? Ah. Updated balance over there, 65,000, 45,000, and 90,000. Yes. From that, we are subtracting like the maximum loss. Hey, no da. I'm subtracting the realization amount to arrive at maximum loss. So you are removing, I mean, whichever you are giving, you are going to remove it. So how does that become the updated balance? Which one? Down. At 40,000. Basically, out of 127, 98 is what you have paid now. So remaining balance payable, it's maximum loss or balance payable. I am calling it maximum loss because the method tells it that way. That maximum loss is nothing but balance payable, no? One more. Huh? Hey, not don't take like same thing. This was the balance I was supposed to pay to A. This was the balance. Correct? Huh? How much did I pay actually? 14. Huh? What was 14? Right? It was allocation of maximum loss. No. Once from the balance, once you allocate the maximum loss, the resulting figure is the payment amount. Now, if you add this 3, it will add up to what? Yes, this adds up to 98. That is the amount of distribution. Now, to arrive at 14,500, take the balance 65,031 and I have paid 50,532. Remaining balance will be 14,500. Understanding? What you get as balance now after allocating maximum loss, that is the payment amount. Clear? If all the three are positive after allocating maximum loss, the resulting figure itself is the amount that you have paid to each partner out of the realization. Understood? Clear? From the balance, subtract this resulting figure. You'll get 14. Fine. All of you clear? No, I don't think so. No. Okay, there is one more method to do the piecemeal distribution, which is highest relative capital method. That is one more. We'll do it. Same guys, it is about distribution only, but here the method we used was maximum loss. There we will use different. Okay. How it will work? Same. At the same format. Until partners loan, we have no problem. Until partners loan, we have no problem. That is when, until 38,000 comes, the first realization. Until the distribution comes to partners capital. No, it is same. First give it to outside liability, then give it to partners loan, then whatever money is available for partners capital, from that point, your method will start. Okay. So till 38,000, From here, everything changes. Okay. Okay. Now, what you have to do under highest relative capital method is all of you focus. Before coming to distribution, you have to do one working note. The working note is, all of you focus. We have three partners, A, B, and C. Take their capital balance. I thought we are taking the same example. What are their capital balances? 105, 45. 75. Clear? Immediately take their PSR. 4 is to 1. Divide it. Divide this by this. It's cap by PS. So 1,05,000 divided by 4. 26. What is the interpretation of this? That means A, for one part of the share, there is total 7 plus 1, 8 parts in the partnership. Correct? No. For one part, A has paid 26,250. Here. That means what? B has paid 15,000 per share. Here. 75,000. C has paid 75,000 per share. So who has paid more per share? C. So don't you think, well, capital repayment is, when the realization money is being apportioned, who should get it first? C. No, Papa has paid for one share 75. That's why what I'll do. Now, once I find out this, I'll take the lowest valuation. Who has the lowest valuation? It is B. That means C could have also bought one share at 15. So what I'll do is calculation. At lowest valuation. Okay. So if one unit is 15, which is the lowest, then A should have paid how much? 15,000 into 4. And the A should have paid 60. B, same, 45 only. Because we have taken his valuation only. C should have paid only. That means how much excess capital each of them has contributed. It's 1,05,000 minus 60. A. 1,05,000 is capital. Has paid 45,000 excess. B nothing. C 60,000. Okay. Two excess capitals we have. Aita. Now what was their PSR ratio? I'm talking about AC because AC have excess. 4 is to 1. Okay. Now you have to see the excess capital that has come is should be in their ratio. Is it matching a 4 is to 1? No, that means there is still excess capital situation. You should stop your working note when this becomes equal to PSR. Did it become equal to PSR? No, because 4 is to 1 is the PSR and this is 45 is to 60. C has paid much more. So continue, repeat the entire calculation. Again, PSR 4, 1, divide 45 by 4, 11,000. This one is, who has the lowest valuation? 11,250. Okay. So 11,250 into 4 will however come to 45. That is not a problem. 11,250 into 1. That means how much excess C has contributed? How much? This is excess, this is nil because his came to 45 only, no? His surplus was 45. This also 45. This becomes nil. Now it came to only one figure. When will you stop your calculation while doing this? Either the surplus should land at 1, only 1%. If the surplus comes to 2%, then it should match with it should be proportionate to their PSR. Then you can stop. Now I will stop. Now tell me what is the priority I should give. First, to the extent of 48,750, first I have to pay off C's capital. Once this is done, then come here. The next set of excess capital is 45 and 60. Okay. But out of 60, you already paid how much? And the excess out of the capitals, you have already paid 48,750. So remaining is actually 45,000 and 60,000 minus 48,750 is 11. Now you have to pay 45,000 and 11,250 for both in their ratio. What was the ratio A and C? 3:1. So you understood this calculation entirely of calculating surplus capital. That we are clear. We'll do the statement. You'll understand here. Okay. Now tell me, on 30th September, I have an excess realization of 38. This 38 first I should give it to whom? C. To the extent of what? To the extent of 48,750. So even if I give 38,000, still I have to give much more. Why 48? How much money do we have from this realization? Only 38, no. We have to pay him 48,750. Out of that, 38 I am paying because my realization was only that much. Now what is the updated balance? This is nil. This is 1,05,000. This is 45. And this is 37,000. Okay. All of you clear? Now what was the next realization? After 38, it was 60,000. Tell me, out of the 60, to whom will I pay first? Still we have balance towards C, no? How much we had? We were supposed to pay 48,750. Out of that, we have paid only 38, and still I have 10,750. So out of 60, 10,750 I'll pay it off to C only. So still how much money I have? 40. Still I have 49,250. So C's excess capital I have paid off. Now I should come to the second level of surplus. What was second level of surplus? A and C, 45 and 60. I would have given 45 and 60 proportionately to A and C. But to C, we already paid now, 38. So technically, how much is there? A, I have not paid a single paisa, 45. C, out of that 60, I have already paid 48,750. Now technically, how much is the balances? 45 I have to pay to A, then 11,250 I have to pay to C. Okay. Now whatever money I have, I will divide it to both of them because both of them have surplus at that level. In the last level, only C had surplus, I paid only to him. At the second level of surplus, both of them have surplus. So I will divide it to both. Yes, sir. Yeah. So now 49,250, divide among A and C in which ratio? 3:1. A how much? 39,000. 4:1. Sorry. It is 4:1. A and C's ratio I'm dividing because I have to give to both now. So whatever money I'm getting, I'm dividing in 4:1. Until how much? Until the total of this amount, which is 56,250. Okay. Divide 49,250 in 4:1. 39. This one. $9,000. Here. All of you. Now you understood what I did. I am distributing the next excess money only to A and C. Why? First, C had the extra over surplus capital C had. I paid him off. Next, A and C have surplus capital. Now, whatever realization I get, I should distribute it among A and C in their PSR until which amount? Until the surpluses gets over. How much is the surplus? Don't take 45 and 60. 60 we already paid. No, out of 60 we already paid 48 750. So until 56,250, I will pay the money to A and C in their PSR. So how much we have paid till now? 49 250. So how much is the updated balance? 1,05,000 minus 39 400. 65,600. And this one? 16,000. ಸಾರಿ ಬಿಗೆ 1 ರೂಪಾಯಿನೂ ಪೇ ಮಾಡಿಲ್ಲ. ಬಿದು ಕ್ಲಿಯರಾ? Now, what is the next realization? We have 98,000. Okay. Out of 98, still have to pay to A and C, no, because their amount has not got over. Their total surplus at the second level was 56 250. Out of that, I had paid only. Hey, wait, I had paid only 49 250. Correct, no? That means still I have 7,000, no? You did not get this, all of you? Huh? Too late. Huh? I'm paying to A and C in their PSR until their surplus gets over. Once I finish their second level of surplus, now I'll distribute the next realization to all the three of them in their normal PSR. First have to pay off the surpluses. First level surplus we paid off to C. Second level of surplus is how much? A and C. 45,000 and don't tell 60 because out of 60 I already paid 48,750. So it remaining is 11. Now the second level of surplus is 48,000 and 11,250. Until this gets over, I will pay it to A and C. Now tell me out of the total 56,250, how much I paid? 49,250 I have paid from the last realization. Remaining will be. So this 7,000 also I will divide it among A and C in 4:1 ratio. What? No more. That's what, that is the process. In the process of realization, I want to first pay off that partner who has contributed more in comparison to his PSR. First, he should get the money, no? Then you should do proportionate. Now, out of 98 that you have got, 7,000 you give it to A and C only. 7,000 in 4:1. It is? Hey, 7,000. 5,600. Then 1,000. Okay. So I gave it to AC. Now AC surplus is also done. Second level. First level surplus over. Second level surplus over. Good. Now what will we do? Now there is no surplus. Whatever money you get from now, distribute it to all the three partners in their PSR. Now remaining was how much? 91. 91 should be distributed among 3 in 4:3:1. $11,000. Now the updated balance. 14,500. 10,875. Clear? Please check the answer of maximum loss method. Okay. All of you got it? We have what full today. It'll however be there in YouTube. Don't worry. I just wanted to cover because we don't have time, man. With the remaining time, we have to do company accounts. We have class only till 1 o'clock today. Yeah, I have other class scheduled. No economics. Huh? Pakka? Economics is not there, I guess. But just confirm once, okay? I don't think it will be there. Huh? Who? Huh? Understood all of you? Huh? Hmm. Now, now just see this calculation once, all of you. Hey, here, just focus on this calculation. First, what did I do? Wait. Hey, later you write down. Now see here. Three capitals, 1 lakh 5, 45, 75. Their PSR divided. We'll get 15,000 and 75,000. Okay. Now you have to see who has the lowest valuation per unit. Who has 15. So use his valuation to see how much is the required capital. 15 into 4, 60,000. 15 into 3, his valuation only, 45. 15 into 1, 15,000. How much excess they have paid? A has paid an excess of 45. C has paid an excess of 60. Still, we got two partners excess. Now what you have to do is, to decide whether you have to continue or stop, see if the excess is there in PSR. Is the excess there in PSR? No, that means there is still surplus. You have to continue. Again, do the same process. 4, 1, 11, 250, 60. Who has the lowest valuation? 11, 250. 11, 250 into 4, 45. 11, 250 into 1, 250. Now, 60 minus 11, 250. 48,750 is the surplus of C. That's all. Now, you'll stop because it came to 1. Now, from whatever money you get, okay, first you have to pay off C. Till what amount? Till 48,750 gets over. Now C surplus. C's over surplus got over. Now let's come to second level of surplus. How much is second level of surplus? 45 and 60, yes. But out of 60, I already paid 48,750. So the updated surpluses becomes 45 and 11,250. Now whatever money I get, I will distribute it to A and C both in their mutual ratio, which is 4:1, until what amount? Until that surplus amount gets over, which is 56,250. Until I spend 56,250 among A and C in 4:1 ratio, I will give the money. Now their surplus also got over. Now second level of surplus done. Now whatever money you have will be distributed among all the three partners in their PSR. 7,000? B. Why? How B? Hey, no. Not A and C distributed. A and C surpluses are distributed. You're understanding the difference? Hey, the problem is, we three are partners. Our ratio is 1:1:1. And we are sharing the profits equally. But my capital balance is 10 lakh for the same share. Your balance is 5 lakh for the same share. His balance is 1 lakh for the same share. Now when the distribution is happening, who should get first preference? Because I have paid, for the one share only I have paid 10, no, I should get the repayment. I am the surplus. Aita? Then you're the next surplus. Like that, how it is happening. First, we pay off the surplus capital until the capital balances becomes proportionate to PSR. Then, once capital balances becomes proportionate to PSR, we distribute the money in PSR ratio. Proportionate to PSR. Stop. Then whatever realization you get, now for example, here only. Say this 45/60 has become proportionate. Now, whatever money you get, pay it off to A and C in their PSR until 1,05,000. Clear? Is paid off, you'll do all this. Will not get anything. Whose capital is proportionate. Aita? Lowest valuation, yes. See, his valuation was what? Per unit 15,000. So that's why he did not get anything in the first also, second level also. He got it in the third level. Clear? So done, guys. Now let's enter into company accounts. Why I covered it, because see, we spent lots of time, but why I covered this can be that one thing which can come as bouncer to you in exam. Aita, if at all they want to test you. Huh? It is easy, but most students, they leave it simply. That's why. When it's easy, why leave it? That's why I wanted to cover. You. So again, one of the highest weightage and easy and a less effort chapter, that is company account. It is divided into various units. Correct? Now, first we have issue and forfeiture of shares, which is a very important part of this chapter. Most of the questions comes from this unit only within the chapter. Then same thing, issue of debentures. Okay. Yeah. Then we have rights and bonus. Then we have redemption of preference shares. Then we have redemption of debentures also. These are the 4 units which will be covering. One more, debentures. That if today time permits. If not, tomorrow only. 2 o'clock. Yeah. Start. So let's first start with issue and forfeiture of shares. There's lots of journal entries to go through, in issue of shares. One thing is, guys, issue of debentures and issue of shares both has journal entries, and the journal entries are similar. Okay, it's okay. Let's first discuss for shares only, then we'll come to debentures. I hope you're very familiar with the journal entries. Okay, and whenever the shares are issued, correct? Some trivias I will tell, which will help you for exam. That money is collected in installments, no? First, money is collected during application, then it's collected during allotment, then remaining money will be collected in first call, second call, final call. Correct, no? And as per the guidance, the application money should be 5% of the nominal value of the share. That means if the face value of the share is say 100 rupees, okay, then application money should be at least 5 rupees, 5%. It can be much more than 5. It's okay. But minimum it should be 5%. This can be useful for your true or false. Okay. We solve all the true or false questions and go. Aita, easy 12 marks. Material, and also take it from this also. No, what's the problem? We'll generate one for true or false, and I will send that. Okay. So do this also. Okay. So it's easy 12 marker. Don't leave it. Okay. Now let's discuss about the journal entry. First, whenever application money is received, what is the journal entry? Bank account debit to equity share application. For preference share also same journal entry, guys. So bank account debit to equity share application account. Then on allotment, what will happen? Equity share application account debits, equity share capital credits. Then when you call the allotment money due, equity share allotment account debit to equity share capital account. Then when you receive that money, bank account debit to equity share allotment. Again, when you make first call, equity share first call account debit to equity share capital. Again, when you receive money, bank account debit to equity share first call account. Clear? So this is a normal journal entry, which you know very well. Then we'll go to forfeiture. What is the entry for forfeiture? First of all, what is forfeiture? Cancellation of shares for non-payment of calls. Alva? So we will cancel the shares. Entry? Wait. First you have to debit the share capital account to the extent of what number? The nominal value and plus the called up amount. Aita, how much of the nominal value have you called up? Now say suppose your nominal value is 10. Out of 10, say you have called only 8. When I say called, what will you understand? That entry is there now. First call entry, allotment entry for calling, making the allotment due, making the first call due. For how much you have called, not how many people. Per share, how much you have called anta. For example, application money is 2 rupees. Aita, allotment money 2. First call 2. Final call 4. So total it became 10. Say I have not done the final call. I have not made the final call. I have done only till first call. How much I have called you? 2, 2, 2. I have called only 6. Final call I have not done only. So how much will you debit here now? Not 10, you will debit only 6. Only to the extent of called up. Paid up Allah, only to the extent of called up. Because there are chances sometimes you have called up but you have still not received, and that's why you are doing the forfeiture. Correct, no? So called up nominal value. Next. Securities premium. You know, whenever, say suppose we are at allotment stage and that allotment money includes premium, then what is the entry for making the due? Say allotment money, 5 rupees is allotment money, 2 rupees is capital and 3 rupees is premium. Securities premium. Out of 5 allotment money, 2 is capital and 3 is premium. What is the allotment due entry? Equity share allotment account debit 5, 2. Equity share capital, which is the face value. How much? 2. To securities premium 3. That's how we would have done now when called. All of you clear? Now when we are forfeiting, again we are debiting securities premium because while calling you had credited. So that's why I'm reversing it back. One thing about securities premium is, if you have received the security premium component, then in forfeiture entry it should not come. Did you understand? If you have not received it but just called it, then securities premium can be reversed. But if securities premium is received, then you have to forget that the securities premium exists during forfeiture. Don't debit if it is received. Clear? 2. Equity share. 2. Forfeited shares. What amount will come here? You know, on forfeiture, whatever money is already paid by the shareholder will not be given back. Correct? No? So whatever he has paid till the date of forfeiture, that will come in forfeited shares account. But don't forget one thing. If you have received, in our example, we have called 6. If you have received 6, then 6 will come here. Aita? But remember one thing. I told you whatever is paid by the shareholder till the date of forfeiture will come under forfeited shares. But if the securities premium is received, that receipt is not considered in forfeited shares. What? ಅದು ವಾಪಸ್ ಕೊಡಲ್ಲ. ಅದಕ್ಕೆ ತಾನೇ ಸೆಕ್ಯೂರಿಟೀಸ್ ಪ್ರೀಮಿಯಂ ಅಲ್ಲಿ ಡೆಬಿಟ್ ಮಾಡ್ತಲ್ಲ. ವಾಪಸ್ ಕೊಡಲ್ಲ, ವಾಪಸ್ ಯಾವ್ದು ಕೊಡಲ್ಲ ಫಾರ್ ದ ಶೇರ್ ಹೋಲ್ಡರ್. ಕ್ಲಿಯರಾ? ಬಟ್ that securities premium component, to the extent you have received, will not come in forfeiture entry at all. Here also you will not debit. In forfeited, say suppose you have paid 5 rupees allotment money and 2 rupees was actually premium. Now I'll give you an example. 2 rupees is application. 5 rupees is allotment. Aita. Allotment includes 2 rupees towards face value and 3 rupees towards premium. Application money 2 rupees. Anta ankoli. So 2 plus 5 it is 7. You have received all this. You have called and you have received. And the final call was 3 rupees, which was not given by the shareholder, and that's why you are forfeiting. Aita. Now tell me. Share capital will be debited for what number out of this? For face value, a premium is involved. No, wait. I'll write here. I'll write the numbers here. Application 2. Allotment is 5. If ILE 3 is premium and 2 is face value. And final call, I'll make it. Let's make it 13, Alva. So 7. And the final call is 3 plus 3, 6. Okay. Final call is 6. Application money you received. Allotment money you called and you received. Final call also you called, but you did not receive. Now we are doing the forfeiture. Say there is only one share in the equation. Okay. Now let's focus on forfeiture. Share capital, how much will you debit? Total called up face value. Aita, have you called up the entire face value? Yes, no. You have done the final call also. You have called the entire money that is to be received towards shares. But see, what is the total money that you have called? 2 plus 5, 7. 7 plus 6, 13. But out of 13, you have to take only to the extent of face value, which is 10. Called up face value. Are we clear there? Now, share premium. Will this come here or not? Should I debit? We have received. Because still here I have received, no? So it should not come 0. Now, in forfeited shares, is what forfeited is whatever we have received till the date of forfeiture. Till date, technically I have received 2 plus 5, 7. But can I take 7 here? No. Wait. That's what? 2 plus 2 will come here. Exclude the securities premium. Because you excluded it here in debit. So in forfeited shares also you have to exclude it. So how much I'll take in forfeited shares? 2 plus 2. I'm not taking the premium. All of you clear? Because SP is already received. 2. Whatever last call will be there, no, that should be credited. It was final call account. Or sometimes if you have transferred it to calls in arrears, then it will come to calls in arrears. Then calls in arrears will be credited. If it is not transferred to calls in arrears, then final call only will come. How much? Is 6. Yes. Yes. Clear? All of you? And what is this calls in arrears account? Whenever you have made a call, but the shareholders will default. No, you'll transfer that amount to calls in arrears. Okay. I'm not able to listen you. Louder. Hey, silence. No. So till allotment they paid properly, yeah? Yeah, okay. Both they did not pay, okay. Yes. Will come because not received. That's all. Forfeited only 2. Next 2 calls in arrears. 2 forfeited shares, 2. 2 calls in arrears, how much? How much you have called but not received? Allotment, that is how much? 5. Then final call 6. 11 rupees will come in calls in arrears. No, there it is 10 plus 3. Okay. Now we'll come there. Okay, we'll come there. Calls in arrears is I called, they still defaulted. I've transferred that amount to calls in arrears. Calls in advance means without even calling. Generally, when will they give money? We call and they will give. Without even calling, if they give money, that is money received in advance. Calls in advance. So technically, please understand, if a shareholder pays money in advance, then I'll have to pay interest to shareholders. Correct? In calls in arrears, since they are paying late, they have to pay interest to us. Correct? No. And that rate is also prescribed. What is the rate? It's 10% and 12% if you remember. But which is for which? Hmm. No, when public get, the government is favoring the public. Okay. That means in calls in advance it is 12%. In calls in arrears it is 10%. Public gets more because government law, no? So public is getting money in the case of calls in advance because we give interest, no? Company will give interest to public. So calls in advance 12%, calls in arrears 10% is the interest that we collect or pay. Clear, all of you? So did you discuss now about everything about issue and forfeiture? Now let's take a solve more and more problems on this. Okay. What? You want entry? We'll do it. Wait, wait. So let's see the journal entry for call scenarios. Only entry for the interest. Yes. Guys, what will be the entry for interest on call scenarios? Interest on call scenarios is our income to the company. Hey, wait. Bank to interest on call scenarios. The interest on calls in advance is our expense. So calls in advance to bank. Clear? All of you. This is our income. This is our expense. Okay. Let's take a break. Coming back, we'll solve questions from this. And just when we are about to start, break time will come. Hello, hello, hello. Dana. So let's continue our discussion. Uh, so come on, guys. Let's take this question from from our RTP only, and let's solve issue and forfeiture of shares. DC Limited invited applications for issuing 3,75,000. One thing about company accounts, it's all repeated questions only. It's not new. Whatever is already covered in our material, no, that only keeps coming in the exam also. Very rarely they test it. Okay, that is one good thing about this chapter. So DC Limited invited applications for issuing 3,75,000 equity shares of 10 each at a premium of 5. That means total issue price is 15. The total amount was payable as 9 per share, including premium. So on application and allotment, guys, here if you see, no, generally whenever we are passing entries, application is separate, allotment is separate. But this is that one peculiar question where it is clubbed. So we have to pass entries clubbed only. Okay. So 9 rupees out of 9, 5 rupees is premium and 4 rupees is towards face value. Okay. The balance will be received on the first and final call. Applications for 15 lakh equity shares were received and applications for 10 lakh equity shares were rejected and money refunded. So what happened is I got applications for 15 lakh. Out of that, 10 lakhs have refunded, gone. I thought for 5 lakhs I've done the allotment. But I have only how many shares? 3 lakh 75. That means what? To the extent of 5 lakh, I've done pro rata allotment. Correct? 15 LA, 10 is refunded. So immediately we'll refund, no problem. But still there was 5 lakh. Shares were allotted on pro rata basis to the remaining applicants. For 5, we have allotted 3 lakh 75 pro rata. The first and final call was made. The amount was duly received except on 7,500 shares applied by Mr. Sunil had applied 7,500. We received. His shares were forfeited and the forfeited were reissued at a discount of rupees 4 per share. You know, forfeited shares can be reissued even at a price lesser than face value. But whatever is coming as discount, that can be adjusted against the forfeited shares account. Remember? So the amount of discount that you give during reissue, can it exceed the forfeited amount? No, it cannot exceed. Okay, only to the extent of forfeited amount you can give discount on the reissue of such shares. So the forfeited shares were reissued at a discount of 4. Passed necessary journal entries for the above transactions in the books of DC Limited. This Sunil guy did not pay which amount? The final call was made and final call he did not pay. Okay, application allotment he has paid. So shall we start? So what's the first entry? Equity share, application and because they have given it together. That's why I'm clubbing it. How much we have got? We got applications for 15 lakh shares. So 15 lakh. So that comes to 1 crore. We'll do it in the next one. No. 1 crore 35 lakhs. Generally, in other due entities, we credit securities premium at this stage only. Only in the first one, this question. Okay. Now, what happened? Out of 15 lakhs, 10 lakhs money I refunded upfront. So what I'll do is out of this ledger, what you'll do is debit the entire amount. That is 1 crore 35 lakhs. Out of this, I can allot only a I can allot only 3,75,000. How much is your to share capital account, nominal value will go. How much is nominal value? Rupees 4 into 3,75,000 shares. Because only to the extent of allotted shares I have to credit. How much? Then to securities premium account. What is premium amount? Rupees 5 into 3 lakh. It is 18 lakh. Then what I did? I refunded. How much did I refund? Rupees 9. Entire 9 rupees I refunded on 10 lakh shares. So that comes to. Is it matching? If you see, it's not matching. What is the gap? What is it? Ah, correct. No. Out of 15 lakh applications that I got, 10 lakh I refunded. Forget it. Remaining is 5. In 5 I allotted 3 lakh 75. If it is pro rata allotment means what? All the 5 lakh application would have got some shares. Some shares they would have got. So, but they have given more money for 5 lakh. So that excess money what they have paid will be adjusted to the next stage, which is first and. So it's share first and final call account. How much is the balancing figure? 11 lakh. So that's the journal entry. All of you clear how we did it? The excess of the 5 lakh applicants will be adjusted to the next level. Why? Because in pro rata allotment, all that 5 lakh would have got some allotment. Done. Next. Next, what we have to do? The first and final call was made. Entry. How much is the final call amount? 6. Correct? No. If 9 is first, the final call will be 15 minus 9, 6 rupees. Correct, Noda? What? What? You had to look at it, you had to, yeah. The total amount payable per share, including premium, 9. Yes. Yes. No, huh. 10 is simple, da. 10 is face. Read the first line. 10 is face value. Is issued at a premium of 5. That means total money that I have to collect per share is 15. Out of 15, 9 rupees I collected in application and allotment. 6 rupees I'll collect in first and final call. 9 plus 6, 15. 9 rupees includes premium of? Yes. Face value. Yes. 15 you have to see. Correct. No issue price because it includes premium. No allotment includes premium. So you have to compare it with 15. So how much is the final call? 6 rupees into on how many shares? On allotted shares, which is 22 lakh 15 15 50 22 lakh 50,000. 2. Same 22 lakh 50,000 being first and right narrations made due. Okay. All of you clear till here, no? You're able to do till here, no? Next. What happened next? The first and final call was made. The amount was duly received except on 7,500 shares applied by Mr. Sunil. That means Sunil did not give money. Other people gave money. Okay. Now, first here. First, tell me how much was the money that we were supposed to receive? We were supposed to receive 22 lakh 50. How much is already adjusted in the first? This much is already. So technically, how much is the receivable? Out of 22 lakh 50,000, 11 lakh 25,000 is already adjusted. That means I was supposed to receive remaining 11 lakh 25. Hey, how is that possible? Refund it then. Refund. 11 lakh 25,000. Sorry, shares. 11 lakh 25,000 is the amount that I'm supposed to receive. Okay, but our, who is that guy? Sunil did not give. Let me see. Let us do the working for Sunil. Sunil had applied for applied shares is 7,500. That means he would have given us into 9 per share during application. So totally I would have received how much? 67. This much I received. Out of this, how much I allotted? See, for that, to always get allotted shares, the formula is what? It is shares applied into allotment ratio. Because please understand, he has applied for 7,500. Do you think we have allotted him 7,500? No. Pro rata allotment happened. No. We would have given him something less than what they have applied for. Correct? No. So, shares applied, we know. He has applied 7,000. What is allotment ratio? Simple. Allotted by total application. How much was the allotment? It's allotted by applied. So how much is allotted? 7,500 into 3,75,000 by 5 lakh. 5,000? Correct. So out of the money he has given, 5,006 25 into 9 goes towards allotment because I allotted him 5625 shares. That comes to how much? 50,000. So this much went towards allotment. That means how much was his excess? It is 16,875 was his balance he was supposed to. No, it was his excess. Aita. Now, what is the money that is to be called money required towards first call? First and final call. Of course, we have allotted him 5625. I wanted 5625 into 6, which is this was the money required towards final call, no? It is 33750. But however, he already had a excess of 16,875. So he was supposed to give money receivable from. What is this guy's name? Money receivable from Sunil towards first and final call is how much? 33,750 minus 16,875 is excess. 16,000. This much he was supposed to give, he did not give. Yes or no? Are of you clear? That means how much total I was supposed to receive? 11 lakh 25. Out of that, this fellow did not give 16,000. That means how much did I receive? Only this guy did not give. No, others gave. That means I received 11 lakh 8,125. 16,875 is what is it? Calls in arrears. All of you understood the math. Can we go to the journal entry? So coming to the entry. So I received bank account debit 11 lakh 8,125. Calls in arrears debit 16,875. 2. What was it? First and equity share. First and which is clear, all of you? Any doubts with this calculation? You want to write down something? It's already there, I think, in our material also. Numbers are different. Then what happened? Now, since he did not give that final call money, we forfeited his shares. Now let's start with our journal entry. Forfeiture. What is the forfeiture entry? Equity share capital account debit to the extent of face value, to the extent of called up. We have called up fully. Yes, we have called up fully. So 10 rupees into how many shares we have allotted him? 5625. I thought 10 rupees also called face value. So it comes to 56,250. All right. Then securities premium will come or not come? Not come because securities premium is completely received. No problem for us. Alva. If it is received, it should not come in forfeiture entry. I'm not taking. We received it in allotment stage only now. First stage only completely received. So 2. Forfeited shares account. Forfeited shares is what? The money that we have received till now. Tell me how much is the money that we have received till now? You can see from this calculation only. See, totally the money received is 67,500. Will I take 67,500? Entirely in forfeited shares? Because that is the money received towards it. ಅದಾದ್ಮೇಲೆ ಅವ್ನು ಇನ್ನೊಂದು ರೂಪಾಯಿನೂ ಕೊಟ್ಟಿಲ್ಲ. Only 9 rupees initially. Will I take 67,500? I know. But the money received is what till now? We did not refund him anything. That means money given by him is 67,500. Will I take 67,500 as forfeited shares? No, why not? Because the 67,500 includes premium also. I have to remove that premium because once premium is received, it will not come in forfeiture entries. Okay, how much is the premium component? Total money received from Sunil was 67,500. How did I get this? 7,500 into 9. 7,500 shares applied into 9 rupees. So totally we had received 67,500. Exclude the premium component, which is 5625 into per share premium component was 5. Aita. To calculate the premium component, take 5625 allotted shares into securities premium into 5. How much, guys? 28,000. That means how much I'll take in forfeited shares? 39,000. So I will take 39,375. It is happening in our building. Huh? Close the door. So 39,375. Now, to call scenarios. How much balance is there in call scenarios account? 16,875. Is it matching? Yes. So that is your forfeiture entry being 5625 shares of Sunil forfeited. Yes. Clear? All of you? How, guys, this forfeited share calculation we did know. Very important part. You understood? I had received, where is it? I had received 67,500. And I reduced what? Premium component. Because you know, if the premium is received, we should forget that it exists in forfeited entry. Clear? So I removed the premium component, securities premium. So I took remaining 39,375. Okay. Ah. 7,500 into 3.5 lakh divided by 5 lakh. That is 0.75. That means everyone got 3/4 of. Yes, of their application. Yes. Yes. Okay. Next, what happened? Reissue happened at a discount of 4. And then we have got 6 rupees, no? Per share, we have got 6 rupees. Right? We have given a discount of 4. Calls. 10 rupees is the face value. Compare it with face value. 10 nalli 4 is the discount. We have received 6. Okay. We have reissued everything now. Hey, forget that. That shares only cancelled. Why are you thinking about it? Leave. Over. This is a new issue. The reissue of the cancelled share. 10 rupees was the face value. You got 10. Face value 10. That whatever is given earlier about that those shares, now don't include it here. Treat it as a share with face value 10 rupees. Aita? So bank account, you would have got 6 rupees into how many shares you reissued? Alva, whatever you had allotted, you have forfeited. 33,750. Then for 4 rupees discount that you are giving, no. For this, we will use the forfeited shares account only. Which is how much? How much? 2. Directly you can put it to capital only. It is 50. 56,250. Okay. Being forfeited shares. Reissue. Then one more important thing that you should not forget is what? Whatever balance is there in forfeited shares account should be transferred to capital. Now this is a very easy job if all the forfeited shares are reissued. If all the forfeited shares are reissued, simple. In this case, is all the forfeited shares reissued? Yes. So that means here it's easy. How much you had? 39,375. Out of that, you have used 22,500. Remaining is 16,875. That much will be transferred to capital reserve. So harder only. Hmm. Yeah. That's why this is the easiest chapter, because this is hard. Good one. Being forfeited shares account balance transferred to see, as I told, no, if you come to our marathon without reading anything, no, it's of no use. Somebody you should have read already, so that we are going through some important adjustments in it. Hmm? Yeah, yeah. We'll take the question bank. Is it to whom? Uh, Wait, we'll do something about that. Hey, anyone has charger? Give. No, no. Power bank will be great. I have 1%. Huh? Of course it will work. Is it? Who told? Hey, tapped. It's working. Huh? Yeah, yeah. In from iPhone 16, C type has come. Doesn't work. Oh, hey, nothing like that. All the laptop charges and all will work. It's creating. That's what that's getting created. Meanwhile, let's have a look at September 2025. Hmm? Hey, no, da, this chapter. It was crazy, no? That's why once we'll have a look at. Okay, let's come back. So let's come to accounts now. Power cut and all. So we are doing question number 19, which was asked in January 26 for 10 marks. Ajanta Limited issued 50,000 equity shares of 10 each payable as 3 rupees on application, 5 rupees on allotment. This includes a securities premium of 2. So 2 is securities premium and 3 is face value. 4 rupees on call. All these were subscribed. Money due on all the shares were fully received, except from X, who was holding 1,000 shares, who failed to pay the allotment and call money. X failed to pay allotment and call. And Y, who was holding 2,000 shares. Y, who was holding 2,000 shares, failed to pay call money only. So X failed to pay allotment and call. Y failed call. That means he's paid allotment. All those 300 shares were forfeited. Out of forfeited shares, 2,500 shares were subsequently reissued to Z as fully paid up at a discount of 2 rupees. So 10 rupees face value, 2 rupees discount, 8 rupees is what we have received. One more thing is they have given something here in the bracket. What does that mean? See, technically we have forfeited 3000 shares, but we have reissued only 2500. Now this 3000 includes X's also, Y's also. How do we know whose shares? They're very clearly told, including whole of X's. And that 2500 includes 1000 X and 1500 from Y. That means the remaining 500 shares, which is there, which is not reissued, belongs to Y. Clear? That matters for our FC calculation, FC to reserve. You do know in the end. Forfeited shares to capital reserve. For that calculation, this matters. Pass the necessary journal entries in the books of Ajanta Limited to record the forfeiture. Also, prepare the extracts of balance sheet and notes to account of the company. That is crazy. Okay, we'll do that also. Huh? Once you pass journal entries, whichever balances you have, show it in balance sheet. We'll do it. It's no problem. We'll discuss. Good question. Question number 90. Fast, you should tell me journal entry. So, first on application, it is 3 rupees. So, fast. So, bank account debit to so it's rupees 3 into 15. 50,000. So that is 1 lakh, 1000 and 1 lakh 50,000. That is first one. Second, then on allotment, it is share application to equity share capital account debit. No excess application and all, no. Just see once. That's all, only 50. Then allotment. Everyone gave application money, so I don't have any problem. Now let's call for allotment entry. Equity share allotment account. How much is the amount? 50,000 into 5. That comes to 2 lakh 50. Out of that, 3 goes to share capital account. Equity share capital, which is 50,000 into 3, which is 1 lakh 50,000. Next, 2. That 2 will go to securities premium. Array yaar. Which is 1 lakh. Did the defaulting start at this juncture only? Yes. What happened? X, who was holding 1000 shares, did not pay allotment. Okay. But Y has paid, no problem. So only X is defaulted. So fourth entry, transfer all that to calls in arrears. Okay. So how much did I receive? Bank account 49,000 into 5 rupees, which is 2. Hey, you have to transfer, no? Not 2, da. It should be debit. Yeah. Calls in arrears account 1000 into debit 5,000. 2. Equity share allotment. Now the receivable will go, which is okay. Then what happened? Then we'll call for final. Final call also will happen, then forfeiture happens. Okay. Next, equity share. We'll call on everything. 50,000 into how much is the call money? 4 rupees. So I'm calling 2 lakh. 2. That also is 2. Again, what happened? X also. Now X also did not pay. Y also did not pay the call money. That means I would have received only on 47,000 into 4 debit. Chiller question only this is. How much? 88,000. Remaining goes to 160.28. Correct. Calls in arrears 3,000 into 4. 2. Equity share. Call account 2 lakh. Okay. Next. So how many shares are forfeited? 3,000. Now, let's do the forfeiture entry. Equity share, capital, debit. 3,000 into, have we called it up fully? Yes. Entire 3,000 shares we have called up fully. The 3,000 into the face value, 10. So premium, where are we collecting the premium? During allotment? Yes. Only for excess share, securities premium will come. I thought why guy paid? No. So that should be excluded. So securities premium only to the extent of 1,000 into how much is premium? 2. That is 2,000. 2. How much? With respect to 2,000 shares, uh, how much should I take as forfeited? Exclude securities premium. So 3 plus 3 plus 3, 6. Alva. 2,000 shares is held by Y. Y guy did not pay only call money. So I'll take 3 plus 3 only, which is 6 rupees. Hey, why are you clubbing? We'll keep it separate. First 2,000 shares is held by Y and 1,000 shares is held by X. X guy did not pay allotment also, call money also. So he has paid only application, which is 3. So for 1,000 shares it is 3. Hey, forfeited noda. What he has paid? Hey, forfeited shares, what is it? Whatever money is already given will not be given back. It's 2,000 into 6. I thought exclude securities premium. It is 6 only, no, after excluding. On application 3, on allotment he had paid 5, but I'll not take 5. 5 includes premium of 2. I'll take only 3. 3 plus 3, 6. Exclude premium. So it's 12,000 plus 3,000. 2. What is there in calls in arrears account? 12 plus 5. There is 17. Matching, matching. Okay. Next. Now that we have forfeited, let's reissue, reissue the shares. So bank account, we have reissued only 2,500 at rupees how much? If 2 is the discount, then 8. So that means 20,000. Then for the discount of 2, I will debit forfeited shares account. Which is 2 equity share capital account 25,000. Clear? Your transfer, now the remaining balance in forfeited shares should be transferred to capital reserve. That becomes easy when only all the forfeited shares are reissued. Here, what has happened? No. Hey, nonsense fellow. 3,000 is forfeited, 2,500 is reissued. 500 is still with us only. The rule is you can transfer the balance of forfeited shares to CR only when that particular share is reissued. Separately, yes. Until the shares are not reissued, you cannot transfer its forfeited shares account balance to capital reserve. So here that is the case. So that's why what you'll do is you have to do, see here, focus. You have to do a per share calculation for both of it. Okay. Now tell me, what is forfeited amount per share? For X it is different, for Y it is different, no? Tell me. For X it was 3, no? For X per share. For X it is 3 rupees. For Y it was 6 rupees. We only did know in that entry. Okay. How much is discount per share? It is rupees. So unutilized portion, rupees 1 and rupees 4. You have to do this unutilized calculation. Now, the 500 shares which is remaining with me, with respect to those shares, the unutilized cannot be transferred to capital reserve because it is still not reissued. I can transfer the unutilized portion to CR only to the reissued shares. Correct. Now you tell me, X has totally, we have issued 2,500. Otherly, we did know that calculation. Where is it? Out of 2,500 that we have issued, 1,000 is from X and 1,500 is from Y. Why? How did I know this? Because of this hint. Correct? No. Whatever is remaining will be of Y. Okay. So 1,000 is fully taken. So reissued shares. X is 1,000 and Y is 1,500. That means how much I can transfer? 1,000 and rupees. Total comes to 7,000. I can transfer 7,000 from forfeited shares account to capital reserve. All of you clear? How? 1,000 into 3. And then 500 was not. Okay, that was for X. Why? So 500 you subtract. So instead of 2,000 into 6, you do 1,500. You get 6,000 plus. Same exact thing we have done. That is the entire forfeited. From that, you have to again subtract the discount. That is what exact calculation you're telling is what we have done. Just see. Okay. All of you understood, I did per share calculation for unutilized. Then to the extent of reissued, I just multiplied. How much ever I've reissued, I just multiplied that per share into reissued shares. This much we can transfer from forfeited shares account to capital reserve. Now tell me how much balance will be there in forfeited shares account with respect to 500. How much is the unutilized amount of 500 shares? 4 rupees, because it's all Y. 500 into 4. 2000 rupees will be there in your forfeited shares account, like that only. Because they are not reissued. No, you cannot transfer it to capital reserve. Only to the extent of reissued shares, you can transfer its unutilized balance to capital reserve. So how much I can transfer? Hello, if you clear, we have to wait till the reissue. When the remaining 500 shares are also reissued, then I'll use that forfeited shares account for rebate on reissue. If still the balance is there, then I will transfer it to capital reserve. Say suppose there is forfeited shares account balance. This came because you have say forfeited 1000 shares. As long as these 1000 shares are not reissued, this forfeited shares account balance cannot go to capital reserve. That's right. Nah, keep it in forfeited shares account only. Don't transfer it to capital reserve. You'll transfer it only on reissue. Clear, huh? The most important thing is they've asked balance sheet. So you have to write how much is the share capital. Where will now we have forfeited shares account balance of how much? 2000. That will be shown where? It will be shown at guys, forfeited shares account balance will be shown where? Guys, in equity share capital, note number 1. It will be added in equity share capital. The forfeited shares account balance will be added in share capital. Clear? It will be added in. Then how much is the capital account balance as of now? 3000 shares we have forfeited, but we again reissued 2500. So totally we have, see earlier we had how much, guys? 50. 50 you have forfeited 3000 shares. Then again you have reissued. So you totally have, correct? No, 49,500 shares fully paid up. So your equity share capital account balance will come to, yeah, but 2 rupees was discount. So capital was credited for how much? By the equity share capital that we are writing, in that once we are calculating the value, we take a premium. For what? Like equity share capital 49,500 is that now. Set aside the 2,500 and something 47,000. Now by calculating that amount which we have got, will we include the premium in the capital account? No. In balance sheet it comes, but not in capital account. It comes in securities premium account. Yeah, very important. Securities premium will come under reserves and surplus. Only the face value component comes in capital. Yeah, right now we are calculating the capital balance. Capital contains only face value, no? So right now issued is 49,500. Yes. Even when there is a discount, capital will be credited for 10. Or else, if you credit it for 8 only, then how can you call it discount? Correct, no? You have credited 10 and 2 is the discount you have given. So our capital is 10 only, no? So totally we have 49,500 shares and each share face value, because to capital account only face value will come. So total equity share capital will be 4,95,000. All of you clear? Then how much will come in reserves and surplus as securities premium? Hey, one more thing. To this 4,95,000 you have to add forfeited shares account balance also. How much is forfeited? Forfeited shares account balance is 2000. What did we understand? Forfeited shares should be added to share capital. We still have balance of unutilized balance of 2000. 500 shares into 4 rupees. So this is your total share capital, which comes to 4 lakh 97,000. Any doubt still here? Then in reserves, what all reserve we have? We have securities premium. Okay. How much balance in securities premium? See, with respect to 2000, see, 3000 shares is forfeited. In the reissued 2500, I did not get any. Wait, see the forfeiture entry, best way. Yeah, from journal only we can take. Okay. See, first, securities premium is credited for 1 lakh. So add securities premium is a reserve which has credit balance. Whenever it is credited, add. Whenever it's debited, minus. So here 1 lakh. Then again here debited. So minus 2. 1 lakh minus 2, 98. So your balance in securities premium is 98,000. Clear? In fact, to get the capital balance also, you can use this method only. Don't worry about that only. Don't worry. Because when forfeiture happened, no, all that is there. Okay. Now leave. Simple, no? Securities premium. Credited, add, debited, minus. For capital also you can do this. Capital. Credited, add, debited, minus. Now see here, take your calci. Wherein all capital is credited, add. See 1 lakh. 50,000. Then again it's credited 2 lakh. It becomes 3 lakh 50. 3 lakh 50. Then again minus 30. It becomes 3 lakh 20. 3 lakh 20 plus 25. It becomes 3 lakh 45. How much did we get? Which one? Which a lot? Here, here. This one. This 1 lakh 50. It comes to? Again, added guys. 1 lakh 50. Capital is credited for 1 lakh 50. Again, it's credited for 1 lakh 50. Then again, it's credited for 2 lakh. Then debited for 30,000. So minus 30. Again, add 25,000. Here, you're getting 4 lakh. To this, don't forget to add forfeited shares. Forfeited shares balance, which comes to 4 lakh. Securities premium, we have done the same logic. We have got 98,000. Then which other reserve we have? One more we have. Capital reserve. How much is capital reserve? Any other reserve we have? That's all. So this is the total of reserves, which is 1 lakh. Correct, no? I think that's all. Forfeited shares, no calls in arrears. Entire calls in arrears was gone on forfeiture. If at all you have calls in arrears balance, what you would have done? Reduce it from capital. Forfeited shares account balance will be added and calls in arrears balance will be reduced from the share capital. Balance. Forfeited shares account balance. Unutilized portion of 500 shares. It is question number 90. That's all. See here. So share capital is 4 lakh 98. We also got same number. We got 97 now. 6 lakh 3,000. How much is there in forfeited shares account balance? 3, yeah? Okay. See, 15 is credited. 15 minus 5, 10. 10 minus 7, 3. Even in our calculation, we should get 3 now. We should get it. How many shares is 500. Forfeited per share is? Why did you take 4? How did we get 4? Wait, come in. Correct, correct. We have taken the unutilized. We had to take 500 into 6. No, because 4 is after reducing the discount. Discount can be reduced only on the reissued shares, not on the not reissued shares. So 500 into 6. So it's 3000, correct. Ah. No, you have to show it like this. This much should be enough. In notes to accounts, 49,500 of 10 each plus forfeited shares 3000. Hey, we showed Noda, securities premium 98, capital reserve 7. Yeah, yeah. See the balance sheet here? Balance sheet is only this much. Yes, extract. It's not full balance sheet, extract of balance sheet. Capital was 498, reserves. Then whatever you have received will be in bank only. I thought that is the only asset you have, no? But very important thing is forfeited shares will come in, will be added in the balance of forfeited, unissued into 6 rupees. Doing into 4 was wrong because 4 is after discount, no. On not reissued shares, there is no discount. We have not reissued only. So it's 6 into 500. Yes, that is the forfeited. The amount did not recover a lot. Forfeited is the amount which is received. We did not take 6 rupees. Hey, what is forfeited? Simple. What is what you have already received from the shareholder? Ah, that we did not. I'll leave it. 6 we got. Take 6 into unissued is 500. 6 into 500, 3000. That will be added to share capital. For some reason, we were taking 4. Wrong. Because 4 was after reducing discount. Why should discount be reduced for unreissued? Correct? No. The forfeited is 6. All of you clear? If you want the bank also, you can find it from journal entry only. Since bank is an asset, increasing debit and the increasing plus and the debit plus credit minus. Sorry? That's all. Vertical. They have just given the extract, not the full balance sheet. Okay. Now, if you see, where and all bank is debited, add 1,50,000, 2,45,000 plus 1,88,000 plus 20. How much do you get? 6,03,000. So wherever for asset the rule is wherever debited add, wherever credited minus. For liability rule is wherever credited add, wherever debit minus. Same rule for reserve also. Just like liability. Same rule is for capital also. Credited add, debited minus. We'll see. So, some more questions on forfeiture? We'll do or what? I'm just asking. Or can we proceed? Yeah. Oh. There is forfeiture, call scenario, reissue and bonus. Chillar only, guys. Realized in cash. Hmm.
Okay. So let's discuss about the next chapter. Now, if you see issue of debentures, no, the journal entries is very similar to this only with respect to that allotment first call. The only thing is the nomenclature changes. There we were using share capital. Here we will use, say if the interest rate is 10%, then we'll use 10% debentures account. There we were calling debenture first call. Here we call it, sorry, there we were calling it shares first call. Here we call it debenture first call, debenture allotment. The process entry is same. Some additional things will come which we have to understand. Okay. There are 6 different cases. Okay. Now you have to tell me the entry, I'll tell the case. Okay. Direct entries. No need to do the process entries. Debentures are issued. You know that debentures can be issued at par. It can be issued at premium. It can be issued at discount also. Also, debentures can be redeemed at par. It can be redeemed at premium. So these are the most famous cases. Okay. Now first, it is issued at par, redeemed at par. 10 rupees is one debenture, 100 rupees one debenture. Issued at par, redeemed at par. Entry. Two. It comes to 100. Simple, no complication. Now, issued at discount, redeemed at par, and they'll repay at 100 only. But I've right now issued it at a discount of 10 rupees. Entry. So, in bank, I would have received only 90. Discount is 10. 2. 10% debentures account, 100. Third situation. Issued at par, redeemed at premium. Say I'm redeeming it at a 10 rupees premium. That means I'll repay 110. Issued at par now. How much I would have received? Because I've issued it at par, 100. But I'll be repaying 110. So what I'll do is, all of you focus. What I'm giving extra on redemption is my expense only. So it's loss on issue of, or you can call it discount also, no problem. It's an expense for us. Loss on issue of, how much? I'll be paying 10 rupees extra. 2. See, this debenture account is just like share capital. Maximum only face value can go, which is 100. That extra 10 is also a liability, but I'll put it in a separate ledger. Premium on. Hey, this is not that securities premium. Securities premium will come into picture when you issue the debenture at a premium. Here, I've issued it at par only. I'm redeeming it at a premium. That is my expense. That is 10 rupees. Clear? Face value. Always. Just like capital. No matter at what price you are issuing, no. The share capital account, debenture account will maximum that can go to that account is its face value. Okay. Next. Crazy now. Issued at, I will do the simple one. Issued at premium. Issued at premium, redeemed at par. 10 rupees. So bank account. I've issued it at premium. 10 rupees. I've issued it at 10 rupees premium. So I would have received how much? 110. So bank account debit 110. I am redeeming it at say par only. So no discount, no loss. 2 100 to securities premium 10. What is it? You want me to do that next? That is also possible. We'll do it. Issued at a discount of 10 rupees. We are redeeming it at a premium of 10. And then I'll be paying 110, but I'm issuing at 90. So bank account debit Ade, loss on issue totally becomes 10 plus 10, 20, no? That's what you're calling it as discount and loss. I'm just combining. Two, it is what? I did not issue it at premium, no. So securities premium cannot come. It is premium on redemption account, which is 10. Clear? All of you understood? No, that also good. Issued at 10 rupees premium. Redeemed at, okay, entry. We are redeeming it at premium. So loss on ten, no, because we are paying a premium of 10. So what the? What the? Yes, it's a liability increasing credit. Correct? The premium on redemption is liability, whereas securities premium is reserve. Correct? No. Securities premium. That's what? Asset. Hey, that's a reserve. Profit. It is what people have given you more for your demand. It's your profit. It will be in reserve. Premium on redemption is what I'm giving them. Yes, that's why I've included here. No. Wait. Huh? Payable. Okay. It's a liability. Dual aspect concept. Expense and liability is booked. Okay. So loss on issue debit 20, premium on redemption payable 10. All of you understood? Then whatever I've booked here no, as discount or loss on issue. Now whatever I've booked here as loss on issue of debentures, that is expense, no doubt about it. But should I write it off to P&L in this year only? No, because it will be violation of matching concept. Because say suppose the tenure of the debenture is 5 years. The discount, whatever I'm facing, the loss, is it only for the first year? It's for the entire tenure of the debentures, no? When I'm giving premium on redemption or whenever I'm issuing the debentures at discount, it's not only for 1 year, it is for the tenure of the debentures. It belongs to all the 5 years, correct? No? So what we have to do? This whatever you would have booked, no, as loss on issue in any kind of entry, whatever you would have debited as loss on issue should be written over P&L account as expense over the tenure of the debenture. And if the tenure of the debenture is 5 years, this should be spread across 5 years. Now the question is, now in my question it was 20. Discount was how much? 20. Alva. And say the tenure of the debenture is 5 years. Can I show it as an expense of first year? No. 1, 2, 3, 4, 5. I have to spread it across 5. How to do it? 20 divided by 5. So that it becomes 4, 4, 4. Can I do that? You can do that. You can spread it like 20 divided by 5. Straight line only when? Only if you issue debentures now and the repayment of the debentures happens at the end of the tenure, which is at the end of 5th year. In middle, repayments should not happen. What repayments? Principal repayments. The principal repayment should happen only in the end. If that is the case, you can do it like this. Take the discount amount divided by tenure and 4 rupees will be apportioned every year as discount, which goes to P&L. Understood? But sometimes what will happen? Sometimes repayment also happens in middle only, no? For example, say your total debenture amount is 5 lakh. Every year you are repaying 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh for 5 years. So by the end of 5th year, your debenture balance will become 0. Understood? 5 lakh is the loan that you have taken. Every year you're repaying 1, 1, 1, 1, 1. Over 5 years, your loan becomes 0. If that is the case, can I just take 20 and divide it by 5? No, no. You have to divide that 20 in the ratio of outstanding balances of the debenture every year. In the ratio of outstanding balances of the debenture every year. Now see here. My total debenture, please understand that debenture is our loan, no? It's our debt. So total debt is 5 lakh, okay? Calculate the outstanding balance every year. Now, first year. How much was outstanding in first year? Entire 5 lakhs. Because you did not do any repayment. You did repayment at the end of first year. So amount outstanding throughout first year was 5 lakh. Second year, out of 5, you repaid 1. Now it would have become 4. Again, you repaid 1. Now it would have become 3. Again, you repaid 1. It would have become correct. Now divide 20 rupees in this ratio. 5 is to 4 is to 3 is to 2 is to 1. How much? 9, 3, 12, 2, 14 plus 1. 5 by 15. 20 into 5 by 15. 6.6. 20 into 4 by 15. 5. 20 into 3 by 15. 20 into 2 by 15. 6, 7. Then 20 into 1 by 50. Clear? Shit, yaar. It's okay. Great. Understood. When will this kind of apportionment of discount happens? I cannot show 20 rupees as expense in first year. What should I do? Spread it across the term of the debenture. In this example, the term of the debenture was 5 years. Okay. You will do straight line under 20 by 5. You will do when? Only when the repayment of the debenture happens at the end of the tenure. In middle, there is no repayment happening. Then just do 20 divided by 5 years. If the repayments are happening in the middle, then you have to divide the discount across 5 years in the ratio of outstanding balance. Okay. If the total debenture was 5, you know the outstanding balances of debenture 5, 4, 3, 2, 1 because every year you were repaying 1 lakh. So outstanding balances become 5, 4, 3, 2, 1. Divide 20 in that ratio over. Now, in first year, 6.67 will be expensed. In the second year, 5.33. Third year, 4. Third year, 4 rupees. Fourth year, 2.67. And fifth year, 1.33 will be taken as expense. Entire 20 will not be booked in first year. Did you understand this? Hello? All of you are there? Clear? When will you do like this? At the end, Alva? Oh. Yeah, of course. Of course, it will be told in the question. Hey, nothing. It will be given in the question only. Okay. So, yeah. So, that's something that you should know about debentures. Now, let's discuss about rights and bonus. Okay. First, what is bonus shares? Tell me. Bonus shares are the free shares issued to existing shareholders of the company. Free of cost. But it is issued only to existing shareholders. Understanding? Say suppose you all are already holding some shares in my company. Bonus shares will be issued to only you people. To a new person, I cannot issue shares free of cost. That's why they give it free of cost is because one logic, if you want to understand why. Yes, the thing is whenever you give dividend, reserves will reduce. So the entry for dividend, journal entry, is reserves account debit to bank. Aita. But sometimes what will happen in a company, we cannot give out dividend because we need money for growth. But if I don't give dividend, shareholders will be unhappy. So to just to make them happy and also not let the cash go out, what we do is we give them bonus shares. It's like out of the money that I was supposed to give as bonus, I'll only keep it and I'll allot them shares for that money. That's how it's happening. Okay. That's why bonus shares is called as capitalization of reserves. Because when you give bonus, what happens? The reserves will reduce, capital will increase. That's why it's called capitalization of reserves. All of you clear? Now, as I said, whenever we give bonus, reserves will reduce, share capital will increase. Can I use any reserves that I want for giving bonus? No, I can use only. Next level. Hey, here. Aram se Inesia. Next level. Okay, so reserves is reducing, capital is increasing. So can I use all the reserves that I want? No. There are main three reserves which is given, which we will use. And I'm telling it in the order of priority. That means you have to use these reserves in this priority only. First, you have to use in the question if there is capital redemption reserve. First preference is for this reserve. Second preference is for securities premium account. And third preference is for free reserves. For your understanding, free reserves means your general reserve and P&L account. Normally, as per the definition, what is free reserve? Free reserve means it's any reserve out of which you can freely distribute dividend. Andre, a reserve which has no restrictions. You can use it for giving dividend. That is called free reserve. That is one condition. And second condition is a free reserve should never be made out of notional profits. For example, have you heard of revaluation reserve? That's an example of notional reserve. That is not a realized profit. That is the profit that is booked by you. No one has guaranteed that profit. Correct? No. So free reserves is two things. What are two things? One, it can be freely distributed as dividend. Second, it should not be made out of notional. I thought this you should know. It will help you in exams. But for your problem solving, the two famous free reserves are your general reserve and P&L. General reserve, P&L. You have to use the reserves for bonus in this priority only. First, CRR. Sir, why this priority? Because CRR has only one purpose. You cannot use it for anything else. And that is issue of bonus shares. Securities premium has 5. Aita section 52 of Companies Act. Free reserves has many because it can be used for anything. That's why that is the order of priority. Okay. So what is the journal entry we pass whenever we issue bonus shares? So it's capital redemption reserve account debit, securities premium reserve account debit, GR or P&L account debit to bonus to shareholders. How to calculate that amount? Bonus to shareholders. It's number of bonus shares into face value. It always. Bonus shares cannot be issued at premium, okay? Bonus shares are always issued at face value. Clear? Then bonus to shareholders account to equity share capital account. Clear? These are the two entries you should know for bonus. That's all. And bonus generally will, whenever you see the question, no, they would have given one ratio. 1:4, 1:5, 1:3 and all. What you have to understand, since bonus shares are given to existing shareholders, when the ratio is 1:3, that means what you have to understand, for a person who is already holding 3 shares, we are giving 1 bonus shares. That is what you will understand from that. That's about bonus. I forgot to record only after the power came back. It will be there in LMS. So no need to worry. Clear? If you know these two entries, bonus issue over. Aita? Huh? Yeah. Reserves. Now, next is rights shares. What is rights issue? Rights issue also shares issued to existing shareholders only, but at a price lower than market price. A price lower than face value becomes shares issue at discount, which is prohibited by our act, except for sweat equity shares. Correct? No? You cannot issue shares at a discount as per Companies Act. Then what is right shares? It is, and yeah, reissue of forfeited shares is an exception. Okay. That is not new issue of shares. It is reissue of shares. Alva. It won't come. Yeah. Only for employees you can issue. Huh? Hey, for shares it has never come. Da. For debentures it has come. Okay. Shares it has never come. So what was I telling? The rights issue. It is shares issued to existing shareholders only, but at a price lower than market price. If market price is say 500, if I issue it at, the rights issue will be done at 400. Okay, not at a price lower than face value. All of you clear? Sir, what is the journal entry for this? See, what is the difference that is happening from the company's point of view? Instead of receiving 500, we are receiving 400. That's all. No, any difference is happening. In market, you would have received 500. Now you are receiving 400. So, and say suppose face value is 100. What is the entry you will pass? Bank account debit 400 to equity share capital only to the extent of face value, which is 100. To securities premium 300. That's all. It's a normal journal entry only. No, only thing is you are receiving 400 instead of 500. No loss. Nothing will come down. Reduced. You are reducing it. You, instead of receiving 500, you are just receiving 400. Your securities premium will, however, reduce. What? Nothing will come. See, this is the entry pa. Guys, do one thing. For rights issue, no new accounting. What accounting you know? That only. The only thing is, rights issues, issue price will be a little lesser than market. Accounting is same. You received 400. Face value 100. What is the entry you would have passed? How much did you receive in bank? 2. Equity share capital? Whatever comes over and above face values? That's all. Same accounting. No change in accounting. That's same. But what is rights issue? But we received 400. No change in accountings. Still we have 300. Clear? Sir, no change in accounting. Then what is that we are learning in this chapter unit then? Our main focus in rights issue is not this journal entry. Journal entry is normal. Okay. Our focus is calculation of value of a right. This is one thing that is never tested in the exam also. This one thing. Okay. But it is there. Who knows again? Suddenly if they bomb. So first we have to understand why we are valuing a right. Say suppose I'm an existing shareholder in a company. Okay. I already have 4 shares. Okay. Now my company has told for every shareholder who has 4, I will give 1 right share. Now as an existing shareholder, I have some options to do. One is I can exercise that right which they have given and I can buy that right share at a price lower than market price. So first option is exercise your right. Second option, 5-star, do nothing. Don't do anything. Third option, this right you have no, this you can sell. That is called renunciation of rights. What right do you have? Lower price, because market price was 500. You can get it at? That is a right, no? That in itself is a right. You can sell this right to someone else. Okay. That is called renunciation of right. The question comes, sir, at what price will I sell? Aita, that calculation we are learning. Aita. That is how economics works. But of course, guys, now of course no one will be ready to pay more than what benefits they get. Aita. Your logic will work when the benefits is something else other than the math. Aita. We are doing the math part of it. Aita. Now some people they wanted to share in that company no matter what, because the director in that company is his rival or something. In that case, people will be ready to pay anything. We are not bringing that, no math. Okay. So value of a right. What we are learning here, if I am renouncing the right, then uh, what is the price at which I will sell that right to another person is what we are learning. Okay. Now let's take some examples, all of you. This also very simple calculation. There are chances suddenly. Wait, I'll only write one question. I'll tell what it is. Don't worry. Hmm. Okay. Now see here, there are some terminologies that we have to understand. Okay. All of you, focus, focus, focus. Can you see the question? What is come right price, guys? Come right price is the market price of the share just before the rights issue. And the right just before the rights issue, the market price is called come right price. What is ex right price? The market price of the share just after the rights issue. All of you focused. Come rights is what? The price, market price of the share just before the rights issue. Come rights. X rights is the market price of the share just after the rights issue. Clear? And tell me, the X right price will be lesser more than come right. X right price will be lower than come right, higher than come right. It will be lower, guys, because just before the rights issue, the market price will be more. Right? Just after the rights issue happens, the market price will fall. Okay. So because of which X right price will be lesser than come right price. Right? So exercise price is what? The price at which I've received the offer. If the market price is say 200, maybe I am allowed to buy it at 150. So that is your exercise price. So X rate is X rate will be less. No relationship with exercise. Aita. Don't think like that. Only link it with come right. Okay. 1:4 is what? That means for every 4 shares that the existing shareholder has, they are giving one right share. Okay. This is the situation. We have to find out at what price I can sell my right. Correct now. Now value of a right is come right price minus X right price. Aita. You'll get a value of a right. What is come right price? Ade, price before rights issue. How much? In my question. The come right price is 200. Minus X right price, we don't know. So we have to calculate it. It's called theoretical X right. Aita. So what is theoretical X right price? How to find it out? Oh, very simple formula. Number of existing shares into come right price plus number of right shares into exercise price into number of shares divided by, sorry, after rights issue. If you apply this formula, you'll get the theoretical X right price and then the price after a number of right shares. Okay, shall we do it? Tell me what is number? Given, of course. What is number of existing shares? Huh? Hey, what was the ratio? Da? If number of shares is not given, take ratio. For every 4 shares, we are giving 1. So number of existing is 4 noda. For every 4, I'll give you 1. Yes, existing, which is 4. Thumb right price is how much is the right? 1 into exercise price divided by number of shares after rights issue is 5. So the X right price has become 190. See, it is lesser than come right. So that you have to subtract here. So your value of right is 10. But see here, that 10 is not the money that you'll receive. It's not yet complete. Money to be received on renunciation is 10 is not the number. Money to be received on renunciation is number of existing into yeah. You cannot find out exercise price. Number of existing shares is how much? 4. Into value of right is? So the money that you'll collect from that person to sell the right is 40. Did you understand? This is something which is not tested. Aita. So if it comes, you should be able to do it. This is because of this reason we see that unit rights issue. Or else there's no stuff. Because accounting is same only, no? Bank account debit to share capital. Are we done? Break. In 15 minutes we have to end. They'll kick me also out. Don't know, man. I have to ask about it. We'll ask, we'll see. Now right issue is done. Then we have redemption of preferences. Again, chiller chapter only. Seriously, it's chiller only, guys. The only thing is I have revised more times than you. Even if you had revised more times, it would have felt chiller. Um, uh, okay. Okay, now let's come to redemption of preference shares. Okay. What is redemption of preference shares? Basically repaying the preference shares. You had issued preference shares, received money. Now you are giving back the money and taking back the share, something like that. That is redemption of preference shares. Okay. Now, why will company do this? One of the most famous reasons is whenever they have more capital, which is not required, then what they'll do? Give it back whichever is not required. Okay. Now, what are the things that we should know? Uh, this redemption is there, no, guys? From where should we start? Uh, So whenever you do redemption of preference share capital will reduce. Aita? Say suppose the face value of a preference shares is 10 rupees. Aita? I can give back 10 also. Sometimes redemption will happen at a premium also. That means to attract the shareholders, for a 10 rupees face value share, I will also offer 15. Clear? Why? To attract preference shareholders. So for a 10 rupee share, I will give 15. That is called premium on redemption. All of you? Now, whenever you are doing redemption, we need money, no, to do it because you have to pay the shareholders back. Now, there are two possibilities here. One possibility is you can use your own surplus funds to do all these things. Clear? One way is use your surplus funds. If you don't have funds, then what is the other way? You can issue equity shares, raise money, and use that money to do the redemption. Did you understand the two ways? Whenever you have money, use your own funds. If you don't have your own funds, then issue equity shares, raise money, and do the redemption. All of you clear? Any doubts still here? Done. And very important thing that you should know in this chapter is capital redemption reserve. Aita? Please understand. Okay. Why do we have this CRRS? The problem is we cannot get in deep as to why this happens, but let's come to the matter. Okay. Whenever the redemption happens, no, I don't want the capital to get reduced. Did you understand my intention? But whenever redemption happens, redemption of preference share, of course, preference share capital will reduce, of course. But I don't want the capital to be reduced. Because what will happen now? If I allow capital to be reduced just like that, owners will take all their capital and they'll leave the lenders here only and they will run away. You're understanding? Huh? They'll take all the Malay good assets and they will run away and they'll leave the lenders in the firm only. So I don't want capital to be reduced when the redemption happens. So that's why what they did is they bought this capital redemption reserve concept. Now what you have to do is whatever nominal value of, what is nominal value? Face value. Face value of whatever preferences you would have redeemed, no. That much you have to transfer from free reserve to capital redemption reserve. For example, one share face value is 10 rupees. I have redeemed how many preference shares? Say 10,000. So 10 rupees is the face value, 10,000 is the number of shares. 10 into 10,000, 1 lakh is the face value of the preference share capital redeemed. Alva, what I should do is that much face value, 1 lakh, no. That much money from free reserves, I have to transfer it to capital redemption reserve. So entry is free reserves account debit to capital redemption reserve, 1 lakh, 1 lakh. How much are we transferring? Tell me loudly. Nominal value of preference shares redeemed. Nominal value of preference shares redeemed. That much I will transfer from free reserves to CRR. Sir, why are you doing this nonsense? You're transferring from one reserve to another reserve. What is happening? Guys, free reserve can be used for anything. Owner will run away. But CRR can be used for bonus shares only. There we read no. CRR, one and only purpose of CRR was bonus. And we know what will happen. CRR will ultimately be converted into capital only. You're understanding? So capital will be intact if you transfer money from free reserve to CRR. Did you understand? Now, one small understanding. If I do redemption out of free reserve, then of course I have to comply with CRR. What if I issue equity shares, raise money, and then do redemption? Do I still have to comply with CRR? No, because the capital is automatically intact. On redemption, capital will reduce. On issue of equity shares, capital will increase. Alva, balance out. So no need of CRR requirements. Sometimes what would have happened? No, in questions, both would have happened. Then how will you decide how much to be transferred to CRR? Yes, amount to be transferred to CRR is nominal value of preference shares redeemed minus again Nominal value of equity shares issue. Say suppose the nominal value of preference shares redeemed is 1 lakh and nominal value of equity shares that you have redeemed issued is 50. Now we will do CRR only for 50. How much will be transferred to CRR? 50. So entries free shares account debit 50,000 to CRR account 50 when both happens. If for entire 1 lakh, if you have issued nominal value of equity shares 1 lakh, then there is no requirement of transfer to CRR from free reserves. All of you clear? You know why? Because on redemption, I want the capital to be intact. I don't want it to be reduced. That is why we have this CRR requirement. Clear? This is one crazy thing that comes here. Right? Rest all journal entries are same. Okay. Okay. Now let's focus on journal entry. Okay. Say suppose the face value of one preference share is 10 and I am offering 15. I thought what is happening? What is the entry? Whenever I'm doing redemption, the capital is decreasing. So debit preference share capital account. Debit only to the extent of whatever you're giving extra, which is 5 rupees, is called premium on. Yes. Yes, yes. It is 5. Oh. You owe 15 rupees to whom? Preference share. All of you clear? 10 is the capital deduction. 5 is the loss. Premium on redemption. 2, your liability is increasing to preference shareholders. 15. Then when you pay it, what will happen? Liability will reduce. Preference shareholders account debit 2. Which one? We are just paying 15. 15 because here I just showed the liability. Yes. It's being paid. First I am just booked the due payable. Yeah. Which one? Da? That premium is like an expense. That's not payable. I thought 10, my capital reduced. Yeah. Total 15. Yeah, while booking only I've shown it as expense, then I've just paid it. While booking, I showed expense. That's different. That's payable. Don't mix it here. Aita? There we used to call this as loss on issue of debentures. Aita? Here, it's premium on redemption. Okay. All of you understood? This is the 2 entries. Then one more is this premium on redemption is there, no? This premium on redemption can be set off against securities premium account. Wait a second, we'll see it. Oh. Ah. One more thing you should understand is this premium on redemption is there now. That will be written off against P&L account, and then it will be transferred to P&L. I thought, what is the entry for transferring it to P&L? This is like an expense, no? So entry will be credit it and debit P&L. So P&L account debit to premium on redemption account. Okay, 5 rupees, 5 rupees. The premium on redemption will later be transferred to P&L because it's a expense. Now, one trivia I will tell. I don't know whether it will help you in exam or not. Actually, if you see securities premium account, the securities premium balance can be used for 5 purposes as per section 52. One of the purposes is you can use securities premium to write off premium on redemption of preference shares. So here I wrote it off against P&L. If you see section 52, they have told it is allowed for securities premium also. But if you further read section 52, the last 2 points of section 52 is not applicable for companies which are following accounting standards. Since in reality and for our problems, all the companies are following accounting standards, the net effective usage is only 3. Aita, 2 is not applicable for all the companies following accounting standards. D and E is not applicable. So we know all the companies will follow accounting standards. Law works that way only, okay, because it would have come much before. Now it is amended. We cannot use it because our assumption is all the companies today follow accounting standards. So technically D and E is not possible. That means we cannot use it for, we cannot use securities premium for writing off premium on redemption of preference share. So in all our questions, we will be using P&L only. Aita? Clear all of you? Huh? Huh. Debenture. Huh. ಇಲ್ಲ ಇಲ್ಲ. In any share, in this also, equity also premium preference, that and all will not happen. Yes. Oh, I understood your question. For debenture, the premium is being booked on the first day only. Whereas for redemption, we are doing it in the, yes, correct. For preferences, we are doing it in the last. Correct. What the? Wait. Hey, no preference share. Hey, bonus issue is asked in May 2026. Hey, but it's RTP. Yeah.
So the question was that or make sure that they should call in a year on.
That will be, that will do. See, this is an important question. This, we have it in our material also. Okay, it's about forfeiture. No, no, da. Not this. Similar, but not this. Okay. We need preference shares also. We don't have any preference. Huh? Yeah, similar. We'll do one thing. We'll take it from here only. We'll do some crazy question here only. After One thing about this we have to discuss, I'll tell you. See, the redemption of preference shares can be done only for fully paid up shares. You cannot do redemption for partly paid up. Do you understand this? I can do redemption only for fully paid up. I cannot do redemption for partly paid up. Then, in question, if I have preference shares which are partly paid up, then what to do? Did you understand my question? What if there are partly paid up shares in the question? Whatever is remaining, call it, receive it. Aita. If they are not giving, then forfeit it and then proceed with the redemption of preference shares. Are we clear? That is one thing you should know. We'll do that question only. Come to this question number 9. Huh? It can come, no? Yeah. So bonus also. For that case, I'll tell for bonus also. Bonus shares also cannot be given for partly paid up shares. Bonus will be issued only for fully paid. Okay. Now, illustration 9. I'll ask you one trick question. Okay, one trick question. Say suppose there was I'm already a shareholder. For one share, I have paid 5 rupees, which is partly paid up because face value was 10. What my company did was, Varshith, don't worry. You're supposed to pay remaining 5 rupees. No, don't pay that. Without paying only, I'll make it fully paid up. Is this also a bonus issue? Hey, what discount? Bonus, is this also a bonus issue? Andre, I'm making partly paid up shares fully paid up without receiving any money. This is also one way of bonus only. But can I use that reserves? All that rules is applicable as CRR, SP. Because the reserve that you can utilize for bonus was CRR, SP and FR. 3 reserves you can use to give bonus shares, correct? No. When you're making partly paid up shares fully paid up for free of cost, can I use these 3 shares? No. You can use only the third one, which is free reserves. You cannot use the first 2. Why? Because as per the act, bonus issue means it's me issuing one full share as bonus. Making partly paid up, fully paid up for free of cost does not amount to bonus issue as per the act. So you cannot use CRR, you cannot use securities premium. If at all you are doing it, then you can use free reserves. Clear? That is again one trick question. If it helps you, it helps you. Nonsense fellow. Clear? Now see this question. Come on. Hey, wait, I will do this and we'll take a break. Okay. The balance sheet of XYZ Limited as at 31st March 21 inter alia includes the following information. See, they have 50,000 8% preference shares of 100 each, 70 paid up. 30 is unpaid. We already discussed, no? Partly paid up, we cannot do redemption. We have 1 lakh equity shares of 100 each already. The securities premium, capital reduction reserve, general reserve. In bank, we have 15 lakhs. Okay. Under the terms of their issue, the preference shares are redeemable on 31st March 2022 at 5% premium. Guys, is giving 5% more. One share face value is how much? Technically, it's 100. Aita, he's giving 15%. So a 5% more, and is paying 105. In order to finance the redemption, the company makes a rights issue of 50,000. See, everything gets covered here. Okay, company makes a rights issue of 50,000 shares of 100 each at rupees 110 per share, 20 being payable on application, 35 on allotment, and balance on 1st Jan. All this nonsense, how you have already learned. Issue of shares, like that only. The issue was fully subscribed and allotment was made. The money due and allotment was duly received by 31st March. The preference shares were redeemed after fulfilling the necessary conditions of section 55. You are asked to pass the journal entry. Okay. Mm. Okay. All of you understood the question, huh? So will you pass journal entry? First thing what you have to do before even starting the redemption. The shares are partly paid up. So first call the remaining money and make it fully paid up. Okay. Huh? Yeah. If it is partly paid up, then first entry should be to tell me what is the entry for making the final call? Preference share, which is how much rupees? 30 into. Oh, sorry. It is here, no? Oh, rupees 30 into 50,000 shares. How much? How much? 2. Preference share capital. It is 15 lakh. Second, now we will receive the money. So entry to preference share. Huh? Yeah, yeah. If nothing is told, we'll receive it. Now I received. I made all the partly paid up, fully paid up. Redeem will not include because it's forfeited. No. Now, next, just forfeited. Whatever is forfeited, don't consider them in redemption. Simple. Because it's cancelled. What to whom will I give back the money? Okay. Now we'll do the redemption. Hey, before that, something else has happened. No? They have made a right issue of 50,000. So we have received 20 on application, 35 in allotment. Hey, all that nonsense, no. Fast we'll do. Bank account debit to. Hey, no, they first issued shares, no. In order to finance the redemption, they have made a rights issue. So I have to first make the rights issue, raise the money, and then do redemption. So bank account debit to what? Equity share application. How much? 20 into 50,000. Next, on allotment, equity share application balance will be taken to. Guys, rights is no new thing in accounting. Okay, do it like a normal accounting. Hey, rights issue is normal issue of shares. Da. Only thing is what? Issue price will be a little less than market ashte. That is the only difference. Accounting and all is same, like issue of any normal share. Okay. Fifth one. Then again we have allotment. So equity share. Allotment debit. 2. Equity share capital. Guys, how much will go to allotment? It's 35 rupees into 50,000 shares, which comes to 70 50,000. Out of that, how much will go? Face value will go to capital account. Face value is 35 including premium. Premium is 10. So out of 35, 10 is premium, 25 is face value. So 25 into, so that comes to 12 lakh 50,000 to 10 rupees into 50,000, which is 5 lakh. Okay. Now we will receive it. Bank account debit to how much? 17 lakh 50,000. 17 lakh 50. Next. And balance on 1st January. How much is the balance? Oh, out of 110, we received 55. So remaining is what balance? No, no, everything will receive fully. Yeah, we are receiving. No, the date is only we have given. What? 31st March 21 is our year ending date. On 1st Jan 23, we are receiving the money. Nothing, we are just receiving the call money. No, nothing to think about. Entry? Sorry. First make final call due. Equity share. To equity share. Capital account. How much is final call? Remaining 55 rupees, no? Out of 110, we have already received 55. So 55 into 50,000. To 27 lakh 50,000, I will call. And on 1st Jan, I will receive it. Just put it in the date column. In the question they've told, thank God. I had already ignored any which ways. Very good. So bank account debit to, I think it's the last question. No, that's why. Bank account debit to 27 lakh 50,000. So done. So totally we receive full share. I thought. Hey, not over. We have not started the redemption only. We have just issued shares. Now we'll start with the main deal, real deal. Okay. Tell me what is the entries? We are redeeming how many shares? All shares. We totally had 50,000. So entries, whenever you are doing redemption, preference share capital will reduce. So 8% preference share capital account debit. It's 50,000 into how much is the face value of each preference share? We have made it fully paid up. So it is 100. So it becomes 50 lakh. Are we giving premium? Yes. Premium on redemption of preference shares. How much is premium? 50,000 into 5 rupees is the premium, which is 2 lakh 50,000. Oh, we have a liability towards preference share holders account. Okay, preference share capital account debit. Premium on redemption is like an expense, which will be written off against P&L. 2. Preference shareholders total liability is 52 lakh 50,000. Hey, nonsense. Done, we'll pay it. So preference shareholders, now we'll pay it. Debit to bank 52 lakh. Okay. Then what else is there? 11th one. First of all, what nonsense? Ah. They don't have all that nonsense in their head only. Nonsense people they are, seriously. They know no the class is happening. Should they allow it in this time? Headless people only. Uh, See the world, I'll tell you no. World is I cannot tell it'll go to YouTube and all. Why will I edit? I don't care. When they don't care that there's a class going on here. And what our academia? Nonsense. What was I telling? So the next entry should be what? That premium is there. No, now that should be written off against P and L. But in the question, we don't have P and L. But we know the general reserve is also a free reserve. We can write it off against that. So premium on redemption of preference shares. How much is it? 2,50,000. 2,50,000. Clear. There is one more thing that you should focus on. CRR requirement. In all the redemption of preference share questions, you have to do one default check for CRR. How to do default check? How to check it? I wrote one formula now. Where is it? Amount to be? CRR is what? Amount to be the nominal value of preference shares redeemed minus nominal value of equity shares issued. Have to compare it once. If there is any number, if there is any difference, that much I'll transfer from free reserves to CRR. Tell me what is the nominal value of preference shares redeemed? We have to take nominal value of preference shares redeemed. Then subtract from it nominal value of shares issued. If it is 0, then leave, no CRR. If there is a positive number, then that number should be transferred from free reserves to CRR account. Now tell me, what is the nominal value of preference shares redeemed? Directly you can see here. In the redemption entry, the capital will be debited for nominal value only, which is 50 lakh. Correct? So first number is 50 lakh minus how much equity shares we issued. Just consider all the capital accounts, okay? Because we have lots of other entry. So all the capital accounts. First we have 10 lakh. Then here 12 lakh 50. So 22 lakh 50. Then 22 lakh 50 plus 27 lakh 50. It comes to 50. If you see, the nominal value of equity shares issued is also 50 lakh. Now it became matching. No need to transfer anything from free reserves to CRR. Because since we issued shares, the capital is intact. So what are the two things that you are comparing to see if the capital is intact? Why both sides nominal is only coming? Because capital is concerned only with face values. So nominal value of preference share capital redeemed minus nominal value of equity shares issued. If a positive number is still coming, then that much will be transferred from FR, free reserves, to capital redemption reserve. What is the entry for that? It's P&L account or general reserve account debit to capital redemption reserve account. All of you clear? But this was a chiller question only. We'll take some crazy one. Hmm. What the? Tell. Hmm. What? Next, we have to do some more problems. From what? Rights and bonuses that much only. Da. There is no need for my intrusion. You can still manage. ಇಲ್ಲ ನಾನು ಇಲ್ಲಿ ಹೇಳಿದ ಅರ್ಥ ಆಗಿದ್ರೆ ಅದು ಮಾಡ್ಕೋಬಹುದು ಅದರಲ್ಲಿ ಇನ್ನೇನು ಹೊಸ ಕ್ರೇಜಿ ಏನಿಲ್ಲ ರಿಡಮ್ಷನ್ ಆಫ್ ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ಸ್ ವಿ ಕ್ಯಾನ್ ಡೂ ಒನ್ ಮೋರ್ ಓಕೆ ದೆನ್ ದ ಕ್ರೇಜಿ ಸ್ಟಫ್ಸ್ ಆರ್ ಆಲ್ ಇನ್ forfeited shares only. There's no crazy stuff in the issue of debentures, nothing. Redemption of debentures also nothing. The only crazy stuff is shares and forfeiture options. ಬರುತ್ತೆ ಅಷ್ಟೇ there is no need for us to do it here. Crazy stuff is not there. Yeah. Well, two entries, sir. Reserves to bonus to shareholders to equity share capital. That's all. And you have to use the reserves in that order. That's all. If two things you remember, over. Rights, just remember that value of right. That's all. Chill. Huh? What? Yes. In any, see, generally how bonus comes in questions is that it will come as part of some other question. There they have asked us to do bonus. So whenever bonus is asked, these two entries should come. Reduce reserves, use that reserves in that order, increase capital. Bonus is done. Then do the other parts of the question. Yeah, whatever has come, that. Okay. There's no single question in that question bank, no, from redemption of preference shares. Did you see anything? Check. So let's do this question. Illustration 5. What? What? We'll again take break, come back. Even if we come back, we don't have time to continue. That's why we'll finish and go. Or else take 5 minutes break. I'll go and see what has happened. What is the situation once. Okay. Hey, only 5 minutes, da. After this, tomorrow we'll have a. No, tomorrow you'll not have echo. I think it starts from 20th. 20. Yeah, day after tomorrow. Maybe. ಏನಮ್ಮ
tomorrow what time test, sir? Hey, test won't say even if vaccine or not. So, yeah.
So I'll be sending you the file. We'll keep it tomorrow only, yeah. Okay, if all of you are ready, then I'll tell. Tomorrow only. Oh, fast realization. I've sent the document. Come on, open. No charge.
16%.
So we'll do question number 12. So it's redemption of preference shares and bonus. Come on, guys. Come on. Let's do it. Redemption of preference shares combined with bonus issue. It was asked in January 2025 RTP. The following is the summarized balance sheet of Trinity Limited as at 31st March 23. So share capital authorized is 10,000, 10% redeemable preference shares 10 each. Then 1 lakh, that is 1 lakh. 90,000 equity shares of 10 each, that is 9 lakh. Total, it became 10 lakh. Issued, subscribed and paid up share capital 10,000, 10% redeemable preference shares of 10 each 1 lakh. Okay, same thing. That's paid up capital. Reserves and surplus. General reserve, we have securities premium, we have P&L account. Then current liabilities and provision. Then we have fixed assets, investments, inventory, trade receivables, cash and bank balance. For the year ended 31st March 24, company made a net profit of 35,000 after providing depreciation of 20. Okay, after giving depreciation, the profit earned during the year is 35. The following additional information is available with regard to company's operation. So what all is there? The preference dividend for the year ended 31st March 24 was paid. Then, except cash and bank balances, other current assets and current liabilities as on 31/3/24 was the same as on 31/3/23. So only cash and bank would have changed. All other current assets and liabilities is intact. The company redeemed the preference shares at a premium of 10%. The company issued bonus shares in the ratio of 2 shares for every equity share. So bonus ratio is what? 1:2. Correct? No, 2 shares for every. Sorry, 1 shares for every. Sorry, 2 share for every. It is what? 2:1. That means for every one existing share, we are giving 2 bonus shares. To meet the cash requirements of redemption, the company sold investments. Need money, no? To do redemption. Investments were sold at 90% of cost. Can you see investments here? That is sold at 90%. That means you have got 90,000. 10,000? Yes, yes. So 10,000 is the loss on sale of investment. Correct? No? When you have sold the investment, you have sold 1 lakh worth investment for 90,000. So there's a loss of 10,000 which should be recorded. You are required to prepare necessary journal entries to record redemption and issue of bonus shares. Yeah, that's what they have asked. Was paid. So if you see all the balances which are given here is as on 31st March 23. I thought all this is happening on 31st March 2024. Can you see? The company redeemed, the company issued bonus shares held on 31st March 2024. Redemption happened on. Okay, so let's start. What da? What da? Why? Full. Reserve to bonus. What da? Entries for. That will come after redemption, Noda. The redemption should happen for that. And too early. Too early to ask. So let's start. So first of all, they have paid a dividend, correct? No? The preference dividend for the year ended 31st March 24 was paid. Okay. So how much is the dividend? Can you see here? It is, we have 10% redeemable preference shares of 10 each. So total becomes 1 lakh. So 1 lakh into how much will be the dividend? 10%. So 1 lakh into 10%. Necessary journal entries to record. Actually, even if you write that much should be sufficient to find out the reserves movement and everything. I need reserves to be there here because we have to see how much reserves is available and all. No, because whenever we give dividend, reserves is decreasing. For that, I'm showing it. Okay. One entry now. So whenever you give dividend, what happens? I've told reserves will reduce, money will go out. Entry becomes reserves account debit to bank. Whenever you give dividend, reserves are decreasing. Reserves is a reserves has credit balance. So reserves will. What reserve do we have? Directly you cannot use reserve. Which reserve do we have? See, we have general reserve and we have P&L account. See, GR and P&L both are free reserves. We can use any to give the dividend. So let me use P&L account. What? First, we should remove the thing from cash and cash. What to remove? Hey, nothing to remove. They have given dividend. I'm passing entry to pay the dividend. Whenever you pay dividend, your reserves will reduce. Reserves has credit balance. When it is reducing, it will be debited. So reserves account debit to bank. Which is the reserve I'm using here? P&L account. Clear? Both are free reserves. No, GR and P&L. Both are anything you can have used. But when both are there, dividend will generally be given from this account only. So it's 10,000. 10,000. Being preference dividend paid. Clear? I'm writing this journal entry because just to keep a track of the reserves movement. Okay. So whenever you give dividend, reserves will reduce, bank will reduce. Okay. Second. Now let's do the redemption entry. Tell me what is the redemption entry? It is 10% preference share capital account, 10% redeemable preference share capital account debit. How much? How much total preference share capital we have? 1 lakh. Are we giving premium also? Yes. So premium on redemption of preference shares account debit. How much is the premium? So it's 10%. Where did it go? So 10% of 1 lakh becomes 10,000. 2. The balance is due towards preference share holders account, which is 1 lakh 10,000. So being money made due towards preference share holders. Actually, one more entry should have come before. It's okay. We'll do it after. So its preference share holders due is 1 lakh 10,000. Next, what will I do? Can I pay? First, I will sell the investments. No, better. Because I don't have money. They told no in the last. Oh, forgot. See the last one. To meet the cash requirements, the company sold investment. So first I'll sell the investments, get the money and then pay. Okay. So we sold it at 90% of the cost. So bank account, how much you would have fetched? The book value of the investments is 1 lakh. You have sold it at 90% of the cost. So you would have fetched 90,000. So bank is an asset increasing debit. Loss on sale of investment debit 10,000. 2. Investment is an asset decreasing credit, which is 1 lakh. Being asset. He's asking why sales account is not coming. Huh? Dude. Being what a question you're asking. That is exactly what I'm teaching in the new batch. Now. Yeah, in the evening. And today we don't have. Generally we'll have. Get rank. Of course we'll call. Next. Now that I got money, now I will pay. Entry. Preference shareholders account liability will reduce. Bank. While paying, debit preference shareholders account debit to bank account. How much were they supposed to pay? 1 lakh. Being money paid to PSH. Okay. Okay. Next. What else am I supposed to do? We have premium on redemption, which will be written off against P&L. So P&L account. Reserve. Yes, yes. I understood the question. Guys, she has a question. We have 18,500. Out of that, we already gave dividend. So remaining is only 8,500. We also earned profit, no, during the year. 35. So 35. P&L account every year will increase for the profit that is earned in the current year. So actual balance of P&L we have is 18,500 plus 35,000. Understood? So we have sufficient, no need to worry. But good observation. P&L account debit. How much is premium? 10,000. 2. Premium on redemption of preference share. Guys, all of you understood? No, we have sufficient balance in P&L because we have current year profit of 35. That is also there. No, that will increase the P&L reserve balance. Being premium, written off against P&L account. Done. Next job. We have to see our CRR requirement. Correct? No. Don't forget. Whenever redemption happens, check for CRR. How to see CRR? Nominal value of preference shares redeemed minus nominal value of equity share. So nominal value of preference shares redeemed is here only, which is 1 lakh. Have we issued any equity shares during the year? No. That means entire 1 lakh should be transferred from free reserves to CRR. So which free reserve do we have? General reserve, we have 1 lakh balance. We'll transfer from that one. General reserve. Whichever free reserve, yeah. Capital redemption reserve account. So debit 1 lakh, 1 lakh. Transfer to CRR as per the requirements of the Act. Next. Next, what happened? They have given bonus. Whenever bonus comes, 2 entries. Utilize the reserves, 2. Bonus to shareholders. Then bonus to equity share capital. So how much bonus? For every 1 share, we are giving 2 shares. How many shares do we have? Equity shares. We have 10,000 equity shares. Can you see? We have 10,000 equity. That is paid up. What you are telling is authorized. You cannot take authorized share capital. You are supposed to take paid up. So actually issued is 10,000. Hey, that is authorized. That's what I'm telling. 90,000 equity shares is authorized share capital. What is authorized? It's just the permission to issue. Correct? No. Actual issued is 10,000. So for every one, they are giving 200. Bonus shares is 20,000. All of you clear? We are giving 20,000 bonus shares of 10 each. So how much money is required? 20,000 into 10 rupees. That is 2 lakh. Which all reserve should I use now? First, do we have CRR? In question, it's not there now. We just transferred and we have created. So, CRR account debit. How much balance is there? Then next we can use securities premium. Do we have securities premium balance? How much we have? We have 70,000. We have only 70. Alva, still we need 30. For that we'll use. We have general reserve. We have in GR. How much did we use here? Hey, here we used entire 1 lakh no in GR. GR is 1 lakh 20. Okay. How much is required for me? 30. No, we'll take GR. In GR we have 20. No, the total balance was 1 lakh 20 and we have utilized only 1 lakh. So there's still 20 in general reserve. Debit. Remaining 10,000 I'll take it from P&L. 2. Okay. Okay. It's better to present in their format. Bonus to shareholders. Being utilization of various reserves. Next entry. It is how much? Okay. Being bonus shares allotted to equity shareholders. So done now. Next. That's just a journal entry. Okay, we have I think one more. See, this is an interesting question. I thought 18 about debentures. I feel this can come. So let's solve this question 18. Partly convertible debentures. You know what is convertible debentures? The debentures at the end of the term will be converted into equity shares. Okay, let's do this. When was this? Jan 20. So we'll start. Hmm. Interesting question. Why is it not taking? Anyways, okay. We'll continue. A company had issued 20,000 8% partly convertible debentures of 100 each on 1st April 2023. Okay. See, it's not just convertible, it is partly. And then not whatever I'm supposed to pay back to the debenture holders, I will not pay back fully. Some of it I will pay it via equity shares. It will be converted into equity shares. Some of it I will pay it via cash. Correct? No, that is partly convertible debentures. The debentures are due for redemption on 1st June 2024. The terms of issue of debentures provided that 30% of the debentures will be converted into equity shares at a price of 20 per share and remaining will be redeemable at a premium of 5%. You understood? Out of the total money that I owe to debenture holders, 30% will be converted into equity shares and remaining 70% I will give it in cash and that part will be redeemed at a premium of 5% at a premium of 5%. Now calculate the number of equity shares to be allotted to the debenture holders at the time of what is nominal value. It will get converted into equity share. No, the nominal value of that converted equity share is 10. And the market value is 20. Okay. This information is for equity shares. Nominal value 10 rupees, market price 20. Okay. So number of debentures we have is number of convertible. All of you focus, guys. Number of convertible debentures is how much? 20, no, here. It is 20,000. Debentures, sir. Number of debentures, sir. Number of debentures is 20,000. Okay. 30% of this will be converted into equity shares. They only told no 70% redemption via cash, 30% conversion. So 20,000 into 30% becomes 6,000. Okay. All of you clear? This much. Our each debenture is how much? Our each debenture is 100 each into 100. That means the value becomes correct. No, 20,000 is the total debentures. 30% will be convertible. That becomes 6,000. Each debenture is 100. That means I have to give him a value of 6 lakh. How much is each equity share? Each equity share market price or should I take face value to determine number of shares that we are issuing? Guys, never. You should always take issue price only because for a particular share, the face value is 10, market value is 20. I am giving him one share of worth. How much? 20, no? So my share is worth 20 only. So I should take 20. That means number of equity shares that I'm issuing is is 6 lakh divided by 20. That comes to 30,000 shares. I am issuing 30,000 shares of 20 rupees each. Clear all of you? Okay. This is about shares. Remaining 70%, what will I do? I will redeem it. That means I'll give it in cash. So 20,000 into 70%, 14,000. And each debenture, how much I'm giving? 100. No, no. Redemption in cash is happening at 10% more. Correct? No. See, what did they tell? And the remaining will be redeemable at a premium of 5%. So 100 into 100 plus 5%. Andre 105. That means in cash, I have to give them how much? 14,000 into 105. It is 14 lakh. So I'm supposed to give them 14 lakh 70,000 in cash. All of you clear? 6 lakh in equity shares, 6 lakh. Each equity share is 20. That's why I'm giving 30,000 equity shares. And in cash, I'm giving 14 lakh. Totally, I'm giving 20 lakh 70,000. All of you clear? That's how the working goes. What the? We have debenture redemption entries to be passed. Okay. However, we'll learn it in this question only. Again, why discuss about it? Let's go to the second part of that question. What was second part? Give the necessary journal entries related to the conversion and redemption of debentures. Okay. Now let's understand, guys. What is redemption of debentures? All of you? Repaying the debentures amount. Now, before understanding redemption of debentures, some provisions we have to understand. One thing is requirement of DRR. What is DRR? Debenture Redemption Reserve. That means they tell the moment you issue debentures at any point of time, simultaneously you have to maintain a debenture redemption reserve which is equal to 10% of the value of the debentures. Now say suppose you have issued a debentures of 10 lakh. How much DRR you have to maintain? 10 lakh into 10%. 1 lakh you have to maintain in DRR. How is DRR created? It is transferred from free reserve to DRR. So entry will be free reserves account debit to debenture redemption reserve account. When will you pass this entry? The moment you issue debentures and raise money, you have to create a DRR, 10% of amount. 10 lakh into 10%, which is 1 lakh. All of you clear? What is the entry you pass to create DRR? P&L account debit, free reserves account debit to DRR account. 1 point. Second requirement of redemption of debentures is, say suppose, the tenure of the debentures is generally long term. Okay. Now say suppose there are some debentures which are due to be redeemed in the next year. Say suppose the tenure of the debenture was 10 years. You are in the 9th year. Okay. Next year, you should redeem it. So 1 year before that, what you have to do is, for all the debentures that gets redeemed in the next period, You have to see how much is getting redeemed in the next period into 15% of it should be transferred to specified investments. You understood? I see. Wait, I'll give an example. Now, say suppose you have one crore of debentures issued. I don't care. First thing you have to do is see how much is getting redeemed in the next year, next financial year. Say out of 1 crore debentures you have, 30 lakhs debentures is getting redeemed in the next period. I thought 30 lakh into 15%, which comes to 4 lakh 50. That 4 lakh 50 from your normal cash, you have to invest it in a specified investments. So what is the entry? Specified investment account debit to bank account 4 lakh 50, 4 lakh 50. When will you do this? Due only for those investments which is due in the only for those debentures which is due to be redeemed in the next year. So see how much will get redeemed the next year. And in this year, you do the investment. Tell me what is the last day to do this investment? You'll think 31st March, no? But they have given you 1 more month extra. I thought that means 30th April. All of you clear? For all the debentures that gets redeemed in 30th April 26. Sorry. For all the debentures that gets redeemed in 26, 27. The last day to do the investment is 30th April 2026. Did you understand? This year ends in 31st March, but they have given 1 more month grace. Okay. All of you understood how much? 15% in specified investments. Okay. What is specified investments and all we'll go through. No, only we'll see. Wait. When I say specified investments, where is it? See, these are the specified investments in which you have to invest. Can you see? Deposits with any scheduled bank, or any securities issued by central government, any securities which is mentioned in Indian Trusts Act, or any bonds which is mentioned in Indian Trusts Act. All of you, what is it? Any deposit with scheduled bank, any securities issued by central government or state government, any securities issued by Indian Trusts Act, any bonds issued by Indian Trusts Act. So that these are the specified investments. You can do that 15% investment only in these investments. Okay. Just investment. DRR investment. Okay. Then one more thing. We also discussed about the DRR, debenture redemption reserve. What was it? 10% you're supposed to transfer. That also is not applicable to all the companies. Let's see to whom it is not applicable. So for all India financial institutions, AIFI, it is not applicable. To any listed or unlisted NBFC, not applicable. To any listed or unlisted HFC, HFC means Housing Finance Corporations, NBFC means non-banking financial companies. So for them also not applicable. For any other listed companies also it is not applicable. Then to whom it is applicable? It's applicable only for unlisted companies. You understood? Not applicable for listed, unlisted NBFCs. Not applicable for listed, unlisted HFC. Not applicable for this all Indian financial institutions. Then applicable only for unlisted companies. All of you clear? That's why sometimes in question they will tell listed company, unlisted company. What will you understand? For unlisted company, DRR requirement is applicable. For listed companies, there is no DRR requirement. DRR under what? That 10%. From free reserve, you have to transfer it to debenture redemption reserve in the year of issue of debentures only. Whereas the investment is made 1 year before the redemption date. All of you clear? Done, huh? Now let's come back to our question. What is told in our question? You tell me. See, give the necessary journal entries relating to conversion and redemption, assuming that the company has created the DRR. Guys, they have only created the DRR. Then what should we do? See, tell me one thing. Huh? The day redemption happens, now debenture is gone, no? Is there any need for debenture redemption reserve? Because you would have created DRR the day you issued. Now on redemption, there is no need of DRR. So since redemption has happened, whatever DRR balance you have, send it back to general reserve. Because when created, entry was GR to free reserves to debenture redemption. Now reverse. DRR account debit to free reserve. Clear? Because that debentures is only not there now. It got redeemed. Okay. Then what will happen to investments that you had done? Of course, in the year of redemption, you'll sell those investments, realize money, and give it towards redemption. So see what they have done. The debenture redemption reserve investment are sold at par value. So investment is sold and DRR which was created already is reversed on redemption of debentures. They have only created already reserve, no need to worry. They have only done the investment also, no need to worry. What will you do during redemption? The reserve that was created should be reversed and the investment that is there should be and the investment that is there should be sold now to realize the money and do the redemption. Okay. Clear? Ah, correct, correct. If that rule is applicable only for listed companies. I thought that comes where, tell me? In guys, one more important point in bonus is, we can use securities premium also for bonus issue. But for listed companies, they have one rule, okay? You can use securities premium for bonus issue only if that securities premium is received in cash. This rule is applicable only for listed companies and those companies whose shares are listed in the stock exchange. Aita, in the question, if they are very specific that it's a listed company, and further they have told that securities premium is not received in cash, then you cannot use it. Remember, in the is it how? So understood now, guys. Simple. This rule is only applicable for listed companies. Securities premium can be used by listed companies only if it is received in cash. When they tell me how can securities premium be received as non-cash? No, there is one situation. The situation is, okay, it is, yes, whenever you buy a asset. Hey, all of you, now have a look at it. In this question only, we'll understand one more concept. Now see here. Guys, here. Now tell me, you have to tell me the entry. It's a question. I'm buying a building of rupees 20 lakhs. Clear? And I'm not giving cash. I'm giving shares to purchase this building. Okay. The face value of share is 10 and issue a market price of the share is say 20. Pass the journal entries. What's the journal entry? So building is an asset increasing debit. So tell me how many shares are we issuing first? What should we use always? I've told no, whenever we are issuing shares in partly convertible also similar thing was happening. We'll always use market value. So no matter what is the situation, we always use issue price or market value. That means I'm issuing. Correct? So building account debit 20 lakhs to iPad is only tired, I guess. Papa, iPad is only tired, not working only. Building account debit 20 lakh. 2. Equity share capital. We have taken 1 lakh shares into 10 rupees each, which is 2. Securities premium account 10 lakh. See, hey, focus. Now this is that securities premium which is not received in cash. This is the securities premium received in building. You're understanding? So if you're a listed company, you cannot use these kind of securities premium for bonus issue. Only if you're a listed company. These rules are not applicable for normal companies. They can sell and all da. This securities premium which is created cannot be used for bonus issue. Aita. If they are a listed company. If you are an unlisted company, then this rule is not applicable. You can use this 10 lakh for bonus issue. Clear? Why did we come? What were we doing? We were discussing this question. Okay. So now we have to pass journal entries for redemption of debentures. So come on. Where did we pass it? Here. Guys, come on. Tell me journal entry for redemption now. What is happening whenever you are doing redemption of debentures? Your debentures is reducing. Debenture is a liability reducing debit. So how much? 8% partly convertible debentures. How much? The total is coming to 100 into 20 lakh. Correct? Then what is your premium on redemption of debenture? Just now we did it, no, madam, here. Total number of debentures is how much? Face value of each debenture is 100. So it comes to 20 lakh. Okay? Premium on. We are out of 20,000, what happened? No, out of 20,000, 30% is converted to equity shares. 70% we have given cash. So totally we have redeemed the entire thing. Okay. But we have entirely redeemed. Right? The only thing is 30% conversion, 70% redemption via cash. Okay. So premium on redemption of debentures account. How much premium did we give? Can you come to the calculation? See, in shares there was no premium. Correct? No. The premium was there only on the remaining balance. See, actually 14,000 into 100 was the face value, which comes to 14 lakh. You have given 70,000 more. Correct? So how much is the premium on redemption of debenture? 70,000. 14,000. See, out of 20, 30% is converted into shares. 70% we are giving cash. So for 20,000 into 70%, 14. Can you please see the question here? What did they tell? Read the question properly. What? That 30% will be converted and the remaining will be redeemable at a premium of 5. So let's come back to our calculation. See, remaining is how much? 70%. 20,000 into 70%, 14,000. I was supposed to give 100 rupees only, but we have given 105, 5 rupees extra. 14,000 into 5 rupees, 70,000. Okay. So premium on redemption of debentures is 70,000. All this is due to whom? To preference Allah. Debenture holders account 20 lakh 70,000. Now tell me, how did you discharge this 20 lakh 70? So you have to pay, no? Guys, whatever CRR, etc. I discussed now, that and all is not applicable here for redemption of debentures. All that was only for redemption of preference shares. Okay. Debenture holders account, debit 20 lakh 70,000. What has happened is, how much I've paid in cash come to the working? 14 lakh 70,000 I've paid in cash. So two cash. When I say cash, cash or bank. Okay. 14 lakh. And what did I do for remaining? I have issued equity shares of 20 rupees each. So equity share capital account will be credited only for how many shares I have issued? 30,000. Correct? 30,000 into 10. Only 10 will go to capital account, face value. So 3 lakhs. Remaining will go to, it's over and above face value, no? It goes to, which is 3 lakhs. All of you clear? That is how I have discharged. Done. Then what else will you do? Tell me. There is a premium on redemption of debentures which you should write off against P&L. Write it off against P&L. So P&L account debit 70,000. Just like how you did in premium on, redemption of differentials. P&L account debit to which is 70. Next. Papa, whenever you had issued these debentures, you had created DRR. Now they have already created. Now I don't want. Reverse the entry. Entry. DRR account debit to pre-reserve. You can use anything. P&L or general reserve, your wish. Tell me how much DRR you would have created. 10% of face value. How much is face value? 20 lakh. Into you would have created 2 lakhs. Now that you reverse. It's not 2 lakh. One catch you have. Actually, 2 lakh computation is correct only. Okay. But why there's a catch is the DRR requirement, whatever I told. No, generally for convertible debentures, it's only applicable on the cash convertible portion, not on the equity. You understood? Because first understand the DRR concept is only there because on the day of redemption, I want you to keep aside some money. I don't want you to tell that on the day of redemption, sir, I don't have money. So my whole intention of creating DRR is to keep aside. In my calculation, I will not consider those part of the debenture which is convertible in equity. Because for equity, no need of cash, no. On redemption, however, you'll issue equity shares. So that I will not take for DRR calculation. So from 2 lakh, so from 20 lakh, remove that component which is convertible in shares. How much is convertible in shares? 6 lakh. So from 20, if you remove 6, 14 lakh is payable in cash along with premium. So 14 lakh into 10% they would have created DRR. 6 lakh beda, yak beda. Because that is convertible in equity shares. No, you'll not need money on the day of redemption. So DRR to general reserve 1,40,000. 1,40,000. Guys, very important. DRR is not requirement, is not applicable on in case of convertible debentures on that component which is convertible in equity shares. Yes. See, in any case, it was face value only. Aita. But if part of it is convertible in equity shares, on that part, I'm not doing DRR because, however, I'll not need money in the end for redemption because it will be converted into shares. So we will do DRR requirement only for the cash convertible portion, which is 14 lakh. That also only face value. Okay. Don't include any which ways. See, say suppose it's a normal debenture, this thing. Now you would have created DRR on how much? 20 lakh. Only on the face value. Now we are doing it on 14 lakh because 6 lakh is equity convertible. Okay. 14 lakh into 10%. Now reverse. DRR to general reserve 1,40,000, 1,40,000. Next. Then whatever investment you would have created, correct? That I will sell. What is the entry when you sell it? Money is coming to investment. How much you would have created? How much? Same thing, same logic on 14 lakh cash convertible portion. So 14 lakh into 15%. Okay, same logic for the investment also. It is 2 lakh, 2 lakh 10,000, 2 lakh 10. Same logic for this also. The 15% investment will be created on the cash convertible portion. Okay. So yeah, that is all you do. Redemption of debentures. Done, huh? All of you? Please don't forget to reverse the DRR on redemption because not required. Don't forget to sell the investments on redemption because we need money. I don't. It's all subjective. Huh? What? Full marks, huh? No, no. See, in the question paper starting line they have written. Working notes form part of your answer, Anta. Yeah, yeah. See the question paper. Yeah, they will cut, of course, but how much they'll cut and all. Hey, simply write down what is nonsense. Sorry? Ah. Enough, more than enough. If you cover this PDF properly and go no more than enough. Anyone who masters this PDF and go no. Andre, if that similar adjustments comes and if you're able to solve it, if you're in that position, then any day more than 70, 80 you'll get. Fix. Okay. What? What da? ಏನೇನೇನ no, he will, but that is not possible, man. You cannot do it. Ah. Hey, still you don't get it, huh? What nonsense? Nothing is in it. Seriously. What was hardest here? It's a different concept. See, Samotha told the truth. Irli bidi. If you are ready to write, of course. Okay. So yeah, all the best for your exams. Huh? Wait, huh? All the best for your exams. Do well. I feel that all of you are prepared pretty well. Okay. Please don't go and spoil an exam. Okay. You know you can manage. Do well. Don't lose your confidence because one thing what you should know is not see in this marathon. My only focus was to try to solve biryani questions. But exam will not be like that. Only one or two will be biryani. Rest all will. No, no, no. You can see the question papers. Okay. Not everything will be, and question paper will be framed that way. Not everything will be a new question or difficult one. Okay. Most of it is what you'll already be knowing. I thought, unless it's a September 2025 attempt. Okay. That changed everything. Huh? What? Yes, yes. Have you done that question? We solved it in our class also, not here. In our class, we have solved it. Uh, there was a September 25 partnership question. Just go through it once. It will be there, I guess. It will be there in PDF. That's a crazy question. Da. Go home and do. You would have not done. We have done it in in our class. I thought. Okay. See, what I'm telling is, if a paper comes like normal, like how it comes every attempt, only one or two questions will be difficult. Rest all you can still attempt. If it comes like September, then why worry? Why worry? You have done your best. No, write it in the next one. Yeah. And then not the whole paper. One more thing. Even September 25 paper, not the whole paper was like that. Some initial questions. You remember when you remember you remember that depreciation question we did. That was from September. That partnership questions is referring to, it was from September 25. And that was also September. It was RTP September 2. Yeah, that was chiller question only, man. We simply spent time. Okay. ಆಯ್ತಾ. Okay. What I used to do is always start from the last. So whenever I was writing exams, no, I used to start it from the last, because I feel, I don't know whether they actually do it, but sometimes first question when it comes difficult, no, our confidence will drop. So it's better to start from the last. That's what I've done, and I've also recommended it to many students. They have also told me, one student had personally messaged, sir, that starting from the last actually helped me, sir. Anta. So you also try in mock tests or something if that's working. Then you can apply it in exams also. And one more thing which you should not forget is by hook or crook, finish 100 marks of the paper. You are not stepping outside the classroom without finishing 100 marks. How you will finish? You'll put the format, you'll not put the format. I don't know what you'll do. It's your wish. But don't come outside without writing 100 marks. I'll tell you what happens. The moment you step out, one question will be wrong. It will happen. You see, you can tell me after coming back, okay, sometime when we meet. The moment you come outside, you discuss with your friend, one question will be gone. 100% this happens. So please don't come outside without writing for 100 marks. Attempt it fully. Don't write the extra question and all. Of course, it's not possible also. Just write for 100 marks. Don't. And in the initial 15 minutes given, plan your paper properly. Don't play in that time. Okay. Which question to write first, which question to not write. Aita, please focus on that. And very important thing is, now there will be how many questions? 6. Out of that, we'll be writing 5. Correct? No. 1 is optional. So what you have to do is 5 questions, 3 hours. And roughly we have half an hour, 40 minutes. You have to allocate the time. So when you're writing one question, okay, set that time. Please wear a watch and go. I thought be very strict about time. Okay. The moment 30-40 minutes gets over, immediately leave whatever you are doing, go to the next question. Don't get carried away. Okay. Are you almost there? I'm almost there. I'm almost there. No, that will kill 1 hour. Okay. There has been situations where I've been writing. I still have 4 questions to write and only 1 hour left. All that situation will happen. It's very easy to get carried away in the exam. I thought, don't get carried away. Fix a time. The moment 31 minutes mutti takshna, question number 2. I thought, don't spend time. Your wish. If you think that you'll save time and if you come back, leave space. Okay, better leave space. Continue. In the end, if you think you cannot back, scratch those pages while giving the paper. Okay. But that discipline is very important. You'll not imagine how easily you'll get carried away there. Okay, time will go like this. Okay, please be strict with time. Okay, don't let the time take over. It's okay, leave that question. Don't leave another question which you can solve properly. Aita, no matter how, because sometimes what happens, I'll tell you. Say there's one question from final accounts. Okay, you will feel, array, question we have done. So you'll be very excited and you'll start. 30 minutes, 35 minutes gets over, the balance sheet is not yet tallying. Now, one thing that happens in your mind is, oh, I know this question. I think I've done it correctly. Somewhere only one small mistake until you'll keep searching for it. 1 hour gets over. Don't get carried away. Clear? That time over. Clear? And somehow write 100%. Okay. And one more thing, one good thing about accounts. I understand that accounts is a lengthy subject and everything, etc. But accounts has that one boon which no other subject has. All other subject you'll get 1 day. Accounts you can get 4 days to study because it's the first subject. So I will not accept when student tells that it is lengthy. You're getting 4 days, no, directly. So you make, utilize that 4 days correctly. Don't forget that you're getting 4 days for accounts. That itself is a benefit if you use it in the right way. Okay. So that's about it. All the best. Don't get, one more thing. Don't get panicked and all. Forget, all of you know, one thing keep in mind. No one asks your attempt. No one cares about which attempt you finished foundation in. So please don't take that pressure. Go and write the exam as if it's your mock test. Aita, don't have that pressure. Oh, yo, if I fail, what will happen? What will my parents think? Don't care. Don't tell only. Or else if you feel that you're taking that pressure from your parents or siblings or whatever, go to them and tell, I will fail in this attempt. I will fail and now only you tell. Don't take that pressure. Aita, then write the exam. Okay. I've seen many people, they'll start writing 1 or 2 questions will go, they'll get panic. They'll give up the entire paper, entire attempt. No, it's not that big. Why students are taking it so seriously? No. What? 1 attempt also in on the attempt. Why are you taking so seriously? I know all over internet people will be telling, finish it in first attempt. I don't care. Okay, don't take it so seriously. Take it very lightly. If you take that pressure to exam hall, no, gone on. Huh? Pakka you will, it will affect you. Be very chill. How you were here, no, discussing. Aram saying that mode only after write. All of you. Don't forget that. And please carry admit mark and admit card and all. Have two copies. Huh? Same thing. Take admit card. Have two copies. One in I used to have one in Gadi, Dicky, and one in the bag. Okay. Have two copies for safety. Even if I'll tell you one thing. Even if the copies are not there, it's an online print. You can go to a cyber and you can get it. Don't get panicked. Okay. Even in that time, go. There will be a cyber nearby. Get it printed. Why take tension? Okay. So you have to carry admit card. Pouch should be transparent. Okay. You cannot, they'll not allow. Okay. Then the pen, pencil, pen and all. I think you have to write in black pen. Okay. All that. That's all. Huh? Yeah. That thing is there. What I recommend is carry two calculators. One is for safety. One more is there'll be one fellow who would have not bought. Okay. At least we'll help that person. Huh? Ah. I had that same problem. Okay. Uh, I'm always scared. As in, what if I forget? Because I forget things a lot. So what if I forget? What if I forget? Anta. So same thing. I used to keep one calculator in dicky, one calculator in bag, one admit card in dicky, one admit card in bag for safety purposes. All that you can do. It's okay. There's nothing wrong. Two pen also you keep two. Okay. And on the day of exam, just be chill. Okay. I don't know. For some people it works reading till the end. But how I used to be relaxed. Your brain should work. Now it has to apply whatever it has learned. So be chill. Okay. But again, whatever works to me doesn't work to you. If you feel that reading till the end makes sense, you wish. Okay. But one thing which I'm telling, please don't forget. Please don't come outside the hall without writing 100%. Please. Pakka that will give you result. Okay. Somehow finish 100 marks. It's not only applicable for this paper, all the papers. Finish 100 marks and come. I thought, don't, that will happen. Already I've written 80 marks. I've written very well. So you'll not have that, you'll not put that extra effort for that 20 marks. Oh, I've done 80 marks very well. No, no. Don't do all that nonsense. Please write and come for 100 marks. Pakka, the moment you come outside, one question will be wrong. There'll be one friend who will be waiting outside just to ruin that one question. What I suggest is once one exams gets over, please don't discuss only. No. Finish all the four and one day you come to our academy, we'll sit and discuss. Don't discuss in between at all. Just come outside. That is what I used to do. Come out, come to home. Why are you discussing? The problem is the next subject gets affected. And I'll tell you one thing. Say suppose okay, in the first subject you wrote accounts, maybe you have not done it very well. What if your luck is very good and you still pass in that? But the second and third and fourth subject you have given up. You're understanding? Never lose your hopes just because one subject was bad. Please give the remaining subjects. I've seen many people, including me, okay. Somehow you'll pass in that attempt if the other subject goes well. There is a myth that they will give grace marks for this one subject if you have done very well in the three. It's a myth. Okay, but in most of the cases it has worked. So what if that myth is actually working? Don't give up. Even if one subject has gone, don't forget. My suggestion is no. The moment that paper gets over at 5, just throw that paper and go to home, fresh up, start with the next subject. Don't discuss with anyone. Waste of time. You'll not be able to give the second subject properly. Okay. And please don't try to do any other ulat palat stuff. All that is not possible. You'll not have time. And others also won't have time. Okay. Please don't have the idea of thinking. Don't even think of doing any nonsense. Okay. Because even if there is an intelligent student, he'll not have time to show. So it is, however, not possible. So please don't get debarred simply. It is not possible practically. All of you, all that is not possible. So all the best. See you in intermediate. Bye. We'll update in the group. One more thing. The one more important ingredient to pass this exam is blessings of God and parents also. Don't forget that. Okay. Please take blessings of your parents. Food. Hey, you can go in night pant also. You can wear whatever is comfortable. You can go in night pant. No one will ask you. Yeah. Nothing they'll ask. Yeah.